Hjärtligt välkomna allesammans hit idag. Mitt namn är Sten Gustafsson. Jag jobbar som healthcare-analytiker på ABG Sundal Collier. De kommande 2 dagarna har vi det vi kallar Investor Days Seminar här. Och vi har en väldans massa spännande bolag som vi ska presentera för er. Vår första gäst är Morten Henneveld och är vd för OssDesign, and we'll do this presentation in English. So please, warm welcome to you, Morten. Happy to have you here again, and so we'll start with your presentation, and then I'll do some Q&A afterwards.
Fantastic. Thank you very much for having me. Yeah, I think it's more or less the day a year to the day in the same room, in the same position here. But a lot has changed in OssDesign, as I'll talk to you about. As always, we have the normal disclaimer. I won't spend too much time on it, but I just want to highlight that many of you may OssDesign as the cranial patient-specific implant company. And that is true because that's what we were for the first 10 years of our life. Now, in 2020, we acquired a company. We entered the orthobiologics space in 2021. And as you can see, it materially transformed the company. Essentially, we achieved in 18 months what took us 10 years with cranial. So as a result of that, we announced a strategy shift in September of last year to become a pure play orthobiologics, and at least for the foreseeable future, a only US-focused company. And we've been that since the beginning of this year. Just last week, we came out with our first quarterly earnings as a pure play orthobiologics with exceptional growth, 27 million in sales, 207%, both on a reported and on a constant currency basis. And this also means that we now have, for 8 consecutive quarters, reported triple-digit growth in the US. As you can see here on the slide, it's rolling 12-month sales, and it is a very good-looking chart. We have good underlying growth throughout the business. We also reported 94% in gross margin, or 93.7 to be precise, but that also means that compared to the cranial-only business that we had back in 2020 before we entered the orthobiologics space, it now means that we have more than double gross margin in just about 3 years. So that is, of course, something that we are very proud of. But as a pure play orthobiologics business, there are many applications actually for our product. I'll come back to that a little bit later. But we have a strategic focus on the spine, and I just want to spend a few minutes on that. Unfortunately, as we grow older, the majority of us will suffer from some kind of back pain. Some of us will have what we call spinal instability and will need a fusion surgery that you see here on the right side, essentially where you use some screws and rods, and you always use some kind of bone graft to make sure that you basically fuse and stabilize 1 or 2 or more levels of the spine. And unfortunately, what we see today is that at least 1 in 5 patients do not get the clinical outcome that they expected, and therefore have to go through revision surgery, which of course is not only extremely painful for patients, but is also an extreme cost to the healthcare society. We have about 750,000 fusion procedures, so you can do the math. We have about 150,000 revision surgeries every year. I think they probably start at $50,000, most of them probably above $100,000 fully loaded cost per surgery. So it's an enormous burden on society. The other reason why we are also choosing to focus on spine is, as you can see, it is by far where most bone graft is being used. With the US focus we now have, it means that we are addressing a $1.8 billion market, nicely growing around 8%. And it's also driven, or helped, I would say, by a number of macro and more industry-specific dynamics. One is the underlying volume increase, which will only go up from now on. We are getting older. We have the Second World War baby boomers now getting into an age. And of course, the life expectancy will drive a need for more surgeries. As a surgeon, you have a number of options available for how to treat patients. You can use the patient's own bone, what's called autograft. You can use a donor-based product, what's called allograft, or you can use a synthetic solution that we are offering. What we are seeing right now is many surgeons are moving away from using autograft. It is the de facto gold standard as defined by the FDA, but it does mean a second surgery where you harvest from the iliac crest, from the hip, which means extra surgery, extra days of hospitalization, extra pain for the patient. Similarly, when you're using a donor-based product, it always comes with the risk of disease transmission. And in the US, there's been numerous cases, and they happen on an ongoing basis, some of them very severe, tuberculosis outbreaks where 8 patients died, 130 got infected. So you're seeing surgeons being a little bit hesitant to use that going forward. And last but not least, you're seeing synthetic solution, not just OssDsign Catalyst, also our competitors generally performing better, actually, or on par better than the gold standard from FDA. So there is a swing from surgeons moving towards synthetic solutions. And then the market we operate in is extremely crowded. When you look at synthetic solutions, there are a lot of products on the market. Many are 15, 20 years old. And all evidence point to the fact that the latest generation products are just performing much better than the early generation, which is quite natural. So we are seeing a very significant swing. There is an expectation from the market analyst that the latest generation synthetics will grow at a ratio of 4:1 compared to the early technology. So what is it we are bringing to market? Of course, things have developed. We now have some clinical data that I'll come back to, but we are sitting on a highly differentiated bone graft. This is our preclinical data, and the main reason we actually acquired the company called Xerocos back in 2020, because it is the first time we see preclinical data which is actually performing on par with a very known drug. It's not a bone graft, it's a drug from Medtronic called BMP-2. And as you can see on the right side, this is the best preclinical data we've seen. It significantly outperforms the gold standard, which is the dark gray bar here, autograft, and also a predicate device from Medtronic, significantly doing better than that. And then there is one thing which is often overlooked when you generally look at surgical or implants for surgical use, and that is, does it work in the operating theater? Does it work in the hands of a surgeon? Because you can have the best data, and if it doesn't work in the hands of the surgeon, it's not going to get used. This is something that we have heard and seen again and again from the very first day. My personal belief is that actually the handling that we are offering, and handling means that not only does it works well in the hands of the surgeons, but you can imagine a bone graft which is mixed, when you put it into the surgical site, it gets mixed with fluid, with blood, and other type of substances. And a lot of bone grafts starts to dissolve what's called irrigation. And that means that the bone graft will spread. You don't have it where you actually want bone formation to happen, but you may actually get it where you don't want it to happen. So this is something that we significantly sets us apart from competition right now. And it's not often you get a wow effect from surgeons, but here we actually get a wow effect from surgeons. We are also very committed to making clinical investments. A week after we launched the product in the US, we started our Top Fusion, which is our first inpatient study. I'll come back to that in a second. And at the same time, about 6 months later, we started our Propel, which is a prospective multi-center spinal fusion registry that we are running. We reported in September last year that we've exceeded 200 patients in that study. And we start to have publications out now. We've done a safety study with no adverse events. We, of course, have our preclinical data, and we also have published a first case report from the TOP FUSION study. But of course, the big breakthrough for us happened in January of this year, where we published our first clinical data from the TOP FUSION study. And it was 17 patients. We ended up with 14 evaluable. 3 were withdrawn, nothing related to OssDsign Catalyst. But as you can see, there are a number of really good data points here. One is that we achieved 93% fusion rate, and you have to compare that to the general average, which is around 75 to 80%. But I think more importantly, we know that speed of fusion is one-to-one with a reduction in complications such as implant loosening, infection rate, infection, and so on. And what you see on the right side in the right bar, or in the red bar, is that every single patient that we treated were either fully fused or had progression to fusion already at a 3-month time point. That is exceptionally early and shows something about the potency of the product. Then, of course, we also scored well. Every single patient had improvement in their quality of life scores, and equally important, there was not a single device-related adverse event in the study. And then I just want to draw your attention to this, because bias in clinical studies is generally an issue. Many surgeons will rate their own fusion rate. What we did in this study, we actually sent it to a third-party independent company that only does this, radiologists that only do this for a living, and therefore we took the bias completely out. So we have not even touched the assessment on whether a patient is fused or not. So of course that gives a lot more credibility. At the end of last year, we also became the first bone graft on the entire US market to get what's called an interbody clearance, which is what you see over here, to be used in a cage in the spine. And there were 2 others that were cleared on clinical data combined with their spinal implants. We were the first to get cleared just on the bone graft alone. We were also the first latest generation bone graft to get that clearance. And I would say in the companies we typically compete with, which are the pure play orthobiologics companies, we were also the first one. So there have been more that have been given. You know, unfortunately, when you get these clearances, you also show the path for other companies of how to do it. But I think it is important. We were the first actually that got it, and it means you can now use OssDsign Catalyst on label for every single spine procedure that exists. We are exceptionally proud of the speed with which we have commercialized it. I remember when we acquired Sirakoss, we had a lot of, I would say, critical, healthy critical questions about whether this is something we knew. As you may know, many of us, most of the company actually have a past life before OssDsign in spine and biologics. So this is an area we knew extremely well. And within only a few years, we have really managed to build broad access in the US market. You know, in the US, you have to go through these value analysis committees, what's called VAC approvals. We are now approved in more than 100 hospitals and ambulatory surgery centers. We have also built full access to the military system. We initially got on what's called a DAPA contract, which is a license to sell into certain parts of the military. That contract got expanded in 23. We got on something called ECAT, which is an e-catalog for all active military hospitals. And just not long ago here, we reported that we've also won a contract with the Veteran Affairs, what's called VA, covering nationwide all VA hospitals. And more or less at the same time, we also managed to win our first large GPO contract in the US with Premier. It's one of the absolute giants. There are probably 3 of them in the US right now. This is one of them. So within only a few years, we have really managed to penetrate the US market well. And having said that, there is still an enormous amount of the market that we don't even have access to, right? We're only scraping the surface as we speak, but we have very broad, profound access in the US market. And then I think it's important to note as well that this is a bone graft, and it means that we have a regulatory clearance that actually allows us to use the product also outside spine. We can be used in what's more pelvic surgeries, hip, borderline between spine and hip surgeries. We can be used in extremities, foot, ankle, and others. And we can also be used for trauma cases as a bone void filler. Right now, we have a clear strategic focus on the spine business, but we have started, I would say, soft launching the expansion. We have done a number of sacroiliac fusion, what's called SI fusion. We have also done foot and ankle case already. So we're sitting with a product. Of course, this is a matter of priorities and investments and so on about how broad you go in the market. We have a clear focus on spine, but this is a product that can and will be used broader over time. So just to wrap up, OssDsign is now a pure play orthobiologics company. As I've shown you today, we are operating in a very large, very attractive market with solid underlying growth and helped by some macro tailwinds. It has incredible scalability, as you can see in our own report. Just to put it into context, we're reporting significantly higher sales this year, despite the fact that we only have employees compared to only 12 months ago. As we also guided the market, we expected gross margin to be at or above 90%. We just reported almost 94%. And of course, over time, as that happens, as we're seeing the scalability in the business and we're seeing more operating leverage coming through, of course, that also will translate to a reduced cash burn over time. And therefore, ultimately, we think that this strategy shift, and I think actually our first Q1 report as a pure play orthobiologics very clearly showed that this will generate higher shareholder value going forward. So I think with that, Sten, that was everything I had to present. So I'll hand it back to you.
Excellent. Thank you very much for the presentation. So obviously, good to see the growth momentum since the launch of Catalyst. Going back to the Veterans Affairs, which was extended during Q1, can you say anything about when you expect to see sales coming from those? I think it was an additional 100 hospitals or something like that. Or you know, will it be a significant boost already this year, or does it take longer?
I think what's important. So let me just ask your first question. We're already seeing sales. We did our first case Friday a week ago. So virtually a week or so after we got on contract. So compared to the GPOs, there's a much quicker translation. But I think it's important with any of these large contracts, nothing fundamentally changes in the dynamic of how you sell. You still have to find a surgeon and persuade the surgeon that we have a better offering. You still have to find someone that can help you distribute it in that given hospital. So there are still a few hoops you have to jump through to get in there, but it will be a faster translation. But of course, you know, in all fairness, if you look at the broad market as such, the VA is a smaller part. But I think what's very important with the VA and the general military access is that pricing is at the very high end, which means that all sales to the military will be accretive, not just to top line, but it will also be accretive to gross margins.
That's good. in order to maintain this growth rate, or maybe not the exact numbers, but in order to maintain a momentum, do you need more feet on the ground? Should we expect your sales and marketing organization to expand?
I think I would say in a meaningful way, right? That of course that's a fine line you need to strike between not burning too much money that maybe investors don't like, and at the same time making sure that you're also doing what's right for the company. And as we said, one of the main reasons for the strategy shift was that we saw that cranial had started to drag us down. It was simply locking down funds and resources in the company that we couldn't apply to the biologics business, which was in dire need of more investment. So what you will see from us is, yes, we do need some more. I think it's going to be moderate in 24, more sales and marketing, in particular, horsepower in the US. We also need to accelerate on our R&D and our new product development. We do need more products. We have line of sight to those projects. We need to make sure that we continue the meaningful clinical investments. I think we are starting to see now that they are paying off, and we are expecting to see the first publications coming out of PROPEL during 24. And then, of course, we have grown exceptionally fast, and as you can imagine, just keeping up with demand has been, at times at least, fairly chaotic. And we have to make sure that the fundamental way we produce, we're doing fine. We have line of sight, we have safety stock, so there's no worries right now. We are in a good place, but we have to make sure that we can also cater for 10x volume going forward, and that work has to start now.
That's good. And in terms of you mentioned the PROPEL study, and you had, I think you said in September, 200 patients registered or enrolled in that study. How do we, and the readout will come later this year, but we don't know. Is it?
No, I think, I mean, I think it's important to remember it's a registry. It's not a clinical trial. No. So there is no predefined. The whole idea with having a registry is that it gives you a broad readout of how it actually works in the population, broadly speaking, across all type of procedures, right? Yeah. You know, as much as I like the clinical trials, they have inclusion and exclusion criteria. You can be an NSAID, can have a BMI above a certain level, and then you have an American population which has a very high BMI in general, right? Yeah. So we want to have a broad readout, but it also means we are following the standard of care in the sites that we are working with. So I can't give you a definitive time, because in order to publish something, there has to be a cohort which is with a certain level of conformity that allows you to actually draw some general conclusions. So we are hoping, as we approach the very end of this year, that we have sufficient patient, and in that group we have sufficient patient at 1 year time point, which is the primary endpoint. And then in that group, we also have a similar cohort, so we can do a publication. But I think you will see other things coming out of PROPEL earlier than that this year. And it's primarily the fusion rate. After 1 year, you will. It's primarily the fusion rate, but as you have seen, we appear, as we had hoped for, to have a product which is highly potent. So to the extent, of course, that we can show fast fusion, that's certainly something that we are looking into. And of course, you have to make sure that you have no adverse incidents and those kind of things. But of course, in this industry, the primary endpoint tend to be fusion at 12 months. Would it make sense to make a long-term study to see, you know, over 3 years or 5 years, to see how if the fusion rate is still as high, or has that been a problem with other products in the past? I think, I mean, generally, and that's also why it's become the gold standard to look at fusion at 12 months. Typically, you see most fusion taking place between 6 and 12 months. You actually don't normally see very much in the first 6 months. But with top fusion, we do follow to 24 months. That's just the protocol. But of course, we are looking at what could we be doing next.
Yep.
And how would such a study look like? Of course, over time, we also want to go into markets outside the US, and maybe there's an opportunity if you do a study to double dip and use that data to actually get approval in new markets. So those are discussions we're having internally.
Excellent. I think we're actually running out of time. Thank you all for listening, especially thank you, Morten.
Thank you very much for having me again.
For being loyal and coming back to us. And with that, we conclude the first presentation of today.
Thank you very much.
Hello, everyone, and welcome back to ABG Investor Days. My name is Adrian Gilani, and I'm an equity analyst here at ABG, and I will be moderating this upcoming presentation, which will be given by CEO at Rottneros, Mr. Lennart Eberle. He will hold a roughly 20-minute presentation, and then we should have some time for Q&A after that. So with that being said, Lennart, please go ahead.
Thank you very much, Adrian, and good morning to all of you. It's a pleasure to be here again. A lovely day in May, the sun is shining, the winter is behind us, and all forest owners are now out and planting trees. As you know, we plant 2 to 3 trees for each tree that we've taken out during the winter time. And that guarantees that the Swedish and Nordic forests are continuously growing, which is the basis for our business, of course. Rottneros is a player in the Nordic forest industry and has been that for many decades. Around about 350,000 tons of pulp with some 290 employees, and last year a turnover of 2.8 billion Swedish, roughly 250 million euros. This makes us one of the smaller players in this industry, but we have a very strong dedication and focus on specialty pulps, which create unique properties for our clients. And if we look into where we are, I hope this slide rectifies itself in the meanwhile. We are in the mid of Sweden. We have 2 pulp mills. One is on the western border, close to the Norwegian border, where we make mechanical pulp in Rottneros mill. And we have the Vallvik mill, which makes chemical pulp 2 hours north of Stockholm on the east coast, where we also have a deep sea harbor. So we can go straight from the mill to North America or to the big container harbors in Europe to ship out to Asia. We also have forestry operations within Nykvist Skog, which is in Värmland, as well as a strategic position in the Baltics, in Letland, where we do have some sourcing operations to make sure that we always have a continuous flow of raw materials. Since a couple of years, we're also focusing on further utilizing our pulp into making molded pulp within Rottneros Packaging, and also developing this into a larger operation in Poland, which I'll be coming back to at a later stage. But why should you be investing in Rottneros? Well, the entire forest industry is part of the green transition. We do make products out of renewable materials, such as the fibers from the forest, and can replace fossil-based products. We have demonstrated a very long-term profitability. We are in the process of broadening our revenue base and also working on increasing our volumes of pulp. We have a robust balance sheet. We'll have a look at that later on. We're working responsible with our capital allocation in order to be able to be sustainable also in more distressed periods. The pulp market is a cyclical market, and the profits are going up and down. We create stable shareholder return. Last year, we had a total share return of 11%, and we have strong market positions, which really helps us out when the market is getting a little bit softer. But right now, the market is turning into a very positive trend. Prices are heading north, and this, of course, helps us. If we look at the split of sales that we're having, as I've said initially, we are a specialty producer of pulps that are utilized in packaging, filter grades such as coffee filters, filters for combustion engines, oil filters, as well as electrotechnical applications. So if you see a transformator, it contains fiber as an insulating for the power and the outer metal surrounding. So 3/4 of our sales are going in very dedicated specialty areas. Then we do have special applications such as greaseproof, and only a small share of our sales goes into the bulky areas such as tissue, which of course has a strong growth underneath, and also printing and writing is becoming less and less. The last 2 segments are those which are traditionally the ones where most of the market pulp goes into. And the global market pulp size is some 70 million tons. Out of that, we make 350, so we are really a small niche player.
And the majority of all market pulp is today eucalyptus from South America. So it's hardwood and not the kind of softwood long fibers that we make. So that's a little bit of speciality that creates strength in the products that our customers make. As I've mentioned, it's a cyclical market, and we've seen ups and downs in this market before. Last year was characterized by falling prices. We had the last high peak of prices in the autumn of 2022. Then they have come down in the beginning of 23 during the summer and turned around. And now we're heading back to high levels. And this trend, this is the monthly average, continues into April. The stocks, which are the bars, have come down, which signals a balanced market. It's in favor of the sellers rather than the buyers, and this helps creating a good price momentum upwards. Also, the entire supply chain is a bit under stress, given that logistics into Asia have increased in time, as we cannot go through the Suez Canal anymore, but we have to go around Africa, and that increases transit time and shipping and puts a strain on that. But all in all, we see an underlying trend. Of course, the upper line is the gross price, and from the gross price, we do have to detract the rebate, which is increasing, and you can see the increase of the rebate as the difference between the upper line, the gross price, and the lower line, which is the net price, is increasing year by year. But also net prices are moving up lovely and in a very good way. I talked about that the majority of pulp is coming from Latin America and Asia, and this will continue. It's a bit of a crowded picture, but if we focus on the dark blue ones, which I've circled, that is softwood, which we make in Canada, North America, as well in Scandinavia. You see that most of the happenings is that capacity has been taken out. There is a fiber shortage in Canada, there are increased transportation costs, and that has led to a couple of mills that has been closed. So the latest capacity addition is the Metsä mill in the northern part of Finland, and then going forward, there are no plans for additional softwood capacity. The capacity that will come is on the hardwood, that's the lighter bars, especially in Latin America, and that's the majority of pulp. So short fibers, quite a big volume, creating a cheap pulp. Eucalyptus is ready after 7 years to be harvested, whereas the softwood takes up to 30 years for the first thinning, and then up to 80 years for the final cuttings. Of course, that's increasing the cost for the fiber. And therefore, we have to focus on niches where our customers really can utilize the quality that we produce and are paying for it. So over 3 million tons have been taken out of the softwood market. That's around about 18% of capacity over the last 3 years. Out of these 70 million tons of the market pulp, 18 used to be softwood, and it is gradually increasing. And the Nordic producers are put under pressure, especially in Finland, as the inputs from Russia has stopped due to the war in Ukraine. So 10% of the Finnish imports of fiber from Russia are gone, and that is, of course, putting a lot of stress on Finnish producers. So we have to see what's happening going forward, but all in all, not a lot of capacity plans and certainly no confirmed plans. So the market balance for softwood remains tight going forward, and I think the sort of delta between the short fiber price and the long fiber price will increase over time going forward. Looking at the Rottneros results, we had extremely good deliveries during the first quarter. Unfortunately, we had severe production problems that held back our production volumes, mainly due to the very harsh winter. It was 1 out of 10 years where it was extremely cold with up to -30 degrees also in mid-Sweden. That is impacting the quality of the raw materials, a lot of fines that we have to take care of in the production. So 6% lower production quarter over quarter, still a positive result, but certainly nothing we are happy about, and we're focusing on rectifying that. We have a strong demand. We've seen that since the end of last year into the beginning of this year and going forward. And on the basis of that, we could have very good deliveries as well as rising prices. And the shareholder meeting that was held already in March this year agreed on a 50 dividend, which already has been paid out. So if you follow then on the balance sheet in a couple of seconds, you see that on the cash side, that has been taken in Q1 of this year. Looking at the results more in detail, we're comparing ourselves with a very strong Q1 2023. Remember the price curve, it was still on a very high level in the beginning of last year, delivering 150 million. And then the pricing that has come down during the course of those 12 months into Q1 24 has a severe impact on the result. But also the variable cost, the third part here on the negative bars, is continued to grow. And the majority of the variable cost is the fiber cost, so we are still in an upward trend of wood costs going up. They're not accelerating at the same speed as they've done during 22 and 23, but still successively going up as there is a strong competition around the raw material. It's a fantastic raw material, it's renewable, it's growing, there's more forest now than ever before, but there are certain limits to how much we can harvest in order to maintain the forests to be sustainable as well going forward. Very nice also the point here close to the right side, 20 million in other income. We have a target to be more diversified. We want to be a little bit less of a pure pulp player, and this is testimony of that strategy, and it starts paying results. I talked about the balance sheet. It's still very efficient and solid. We have a equity over assets ratio over 60%. As I've said, this gives us the security to work also in times when the market is a bit weaker. You see the cash generation. We have an available liquidity of over 400 million at the end of Q1. We already have invested 82. We are in quite a strong investment program going forward. I'm coming back on that. And as I've said, the dividend has already been paid out during Q1, so that will be not reoccurring going forward. So looking ahead and what we believe will happen in the pulp market, there are a couple of mega trends, of course, that will demand more pulp going forward. Tissue is an area which grows as the total population in the world is increasing. There's more disposable income at hand. People want to have a better life quality and thus consume more household and tissue paper. The majority of the raw material for that is eucalyptus. So this amount of eucalyptus volumes that you've seen in the other graph will be consumed by a growing tissue market. E-commerce, packaging grades are growing. More people consuming more things, needs to be shipped in a box, in a bag. Whatever we buy has to be brought home. And fiber-based packaging are the most sustainable solutions, and that continues to grow. And we already see here now, again, after 2 years of depressed prices, that price increases for all kinds of carton board and paper products are announced. And I think we see that certainly the confidence of consumers is coming back. Renewable energy demands more transformators, demands more cables. The electrotechnical grades that we're having are uniquely optimized to these applications. We're one of very few suppliers of the non-conductive pulp that makes sort of insulation paper in cables as well as in the transformators. And more of that is obviously going to come as we have to get out of fossil energy sources, more wind power, more solar power, and sustainable as an overall riding theme that demands more renewable products. I talked about the investments that are going on. The mechanical pulp in Rottneros. 2 years ago, we closed the groundwood line, and now we're in the phase of increasing the CTMP. Groundwood was used for newsprint. Newsprint is a quality that is not consumed that much, whereas this quality is for packaging grades. Juice cartons, milk cartons use a lot of mechanical pulps inside to give stiffness and rigidity to the packaging. And by autumn, we will go from 120 to 165,000 tons. This project is online. Most of the things have been made, and the heavy equipment will be put in place in the autumn stop. We're investing in solar energy. We will have a 2 gigawatt hours per year park in Rottneros. We're a big consumer of energy from the grid. We want to take our share of making the energy more renewable, and we're also investing in a battery storage of 8 megawatt hours. The Swedish grid, as all grids, has to be kept at a certain level, a frequency of 50 hertz, and if it varies from that, you have to either add capacity to produce more or withdraw capacity consumption of energy to keep it back to the balance. And battery is a very quick possibility to adjust, and here's a lot of money to be earned from the Swedish net operator, because they have to keep it at the 50 hertz, and they are having daily auctions to make sure that you can switch on or switch off. So it's a very short payback, and there are a lot of batteries in the making now to support the grid development, which is also a consequence of more solar and more wind power in the system. And in Vallvik, we are investing in a tall oil plant, some 90 million into that. Tall oil is a rest product of the chemical process. The fiber, or the wood we take in, is 50% fibers, 30% lignin, and then tall oil and some other things, hemicelluloses. And we take it out in the chemical process, and it's a raw material that then can be refined into oils as being renewable oil within other usages. So it's a standard part of a chemical process, nothing new, but the one we had to be renewed, and this will also increase our capacity of tall oil and make a Vallvik mill more efficient. But we're also talking about the packaging investments we are doing. We have developed our technology within molded fiber-based packaging. We are the first one to have a packaging with a modified atmosphere, so the food that you put into it can be put into a cold chain and not a frozen chain, with up to 3 weeks of shelf life. We are now ramping this up and installing more capacity in Poland. This is underway. It's a bit slower than we thought. We are using a couple of various technological suppliers. All of them have still problems with delivery times, but it's on its way, and by the end of this year, we will see that the first machines in Poland will be started up. And we're also investing in a small startup company that makes bottle capsules instead of plastic out of fibers. So they're pressing the fiber into a very hard capsule that you can screw on a Coca-Cola bottle or a water bottle, which is interesting. And it's a complementary technology. The technology we have is wet-based, using a lot of water, adding certain properties to the product, but there are also ways of doing this in a dry format, which is more energy efficient, but has other limitations. So both technologies will be needed going forward, and it's an exciting technology as we see it. So if we summarize it, we continue to have a strong balance sheet, and it's my and the board's first priority to make sure that that remains intact. We do have a strong market balance. Prices are on the rise. There has been a lot of softwood capacity that has been taken out, and there is a consumer confidence coming back. Stocks globally are on a low level, so there will be restocking that will lead to continued upwards pricing. We do focus on the problems that we have. We are not happy with what happened in the first quarter, and we put a lot of dedication and focus on making sure that we are coming out of the second quarter much better, and we're also adding capacity, and we're diversifying our business portfolio to be a little bit more broad in what we do and also have growth within the portfolio going forward. And with that, I leave the word over back to Adrian.
Perfect. Thank you for that presentation. I'll go straight ahead with a couple of questions. You talked a bit about the market situation currently, what's causing the high pulp prices. Talked a lot about tight supply situation at the moment, but how would you characterize the demand situation on the market right now, and what is the outlook for what will drive demand in the future as well?
Europe, which is our biggest market with some 67%, and North America, I think we see that the market is coming back for paper and board. As I've said, there are a lot of pricing announcements out there. Also, downstream in the value chain, destocking has taken place during last year. And now we see that as consumer confidence comes back, anything that starts to lead to an increased demand directly will lead to an increased demand for paperboard and ultimately pulp. So I think there is an underlying positive momentum. China, which is the biggest market for market pulp, some 40% of all pulp goes into China, still is a bit sluggish. We have to wait and see what's happening there. But sooner or later, I believe also people in China will wake up again and start consuming.
Sounds good. And on the one hand, you have the tailwind from the higher prices, but you also mentioned there's some pressure on input costs coming up. How do you sort of work to handle rising input costs?
Well, primarily, of course, we make sure that we do have sufficient raw material, and we do have very long-standing relations to both the sawmills as well as forest owners who supply logs into operations. We feel that we are competitive when it comes to sourcing. We do have the volumes we need. And it's always a question of keeping the right margin between your input cost and your sales cost. And having the strategy of going into specialized niches where our customers maybe are prepared to pay a little premium, we feel that we can be in this game for a long time.
And on the sourcing part, specifically on the energy side, you mentioned taking the energy production in-house. What's the sort of strategic rationale for taking energy production in-house rather than buying from the grid?
Well, it's a very small part of the energy production that we take in-house. We do consume some 220 gigawatt hours. This is 1%. It's a step in that direction, making sure that we utilize the area that we have. Also utilizing the connecting points into the grid that we have, as we have industrial sites consuming a lot of energy. And with the state of the Swedish grid, that is a bottleneck. So here we have an opportunity actually to add on renewable energy without causing problems for the grid. And I think overall that is positive.
I understand. And another sort of strategic question regarding the ownership you have in Nyquist Skog. Again, what's the strategic rationale for the ownership stake in Nyquist?
Well, it's a 100% acquisition that we've done back in 2020. At the time, we were still using logs for the production of ground wood pulp. That we do not have anymore. But the rationale is that the mechanical pulp we make is based on sawmill chips. So if you think of a big log that goes into a sawmill, 50% roughly becomes sawn products that we can use to build our patios. 50% becomes chips. The chips then are utilized in the pulp industry to make fibers, paper, and board. So this is how the whole forest industry is linked together. And in order to get those chips, we can trade the sawmill timber that we get through Nyquist. So we have a strengthened relation with the sawmill suppliers that we're having. And it's also helping us in our pulpwood relations with Sveaskog and Mellanskog, which is a big forest owners association. So all in all, it has certainly strengthened our position in the local raw material market. And I think it certainly has paid off. We never had to stop due to the lack of fibers during the last years. And the competition on raw materials certainly has strengthened.
And with that in mind, was that a one-time thing, or could more acquisitions be in the cards as well, looking forward?
They're always in the cards. We have to see when they come up and what the price of a potential acquisition is, of course.
Okay. A final question from my end regarding your sort of transition to not just be a pure play pulp provider. Within those other income streams that you showed, is there any aspect within that is particularly exciting that you would want to lift forward, and how big can that become if we look, 4 or 5 years out, perhaps?
I would say the most exciting part of that is our packaging initiative. Here we have basically unlimited growth potential. We have to make sure that the technology works. We have a strong demand from the market, so it's much more a supply question rather than a market question. And then, as we have to see how we can finance future growth in that way forward with other joint ventures, for example, or licensing out our technology, I think there is a great upside.
Okay, and with that being said, we are unfortunately out of time. So I'd like to thank everyone for participating, and thank you to Lennart as well.
Thank you very much.
Hej, mitt namn är Viktor Rudstenlöv och är fastighetsanalytiker på ABGSC Kollen. Idag har vi med oss Stenhus fastigheter och presenterar idag gör Mikael och Thomas. Jag gör så att jag lämnar över till er för en 20 minuters presentation och sen kommer vi följa upp med en frågestund efteråt. Varsågoda.
Hej allihopa, Micke Nikander heter jag, är vice vd på Stenhus och här har vi
Thomas Georgiadis, CFO och en av huvudägarna i Stenhus.
Vi hoppar väl rakt in i sifferleken. Vi brukar alltid göra så att den rapport vi har släppt i historia. Så vi brukar försöka titta framåtriktat. Sen går vi tillbaka och tittar på vad vi hade för siffror och presenterar en del av vårt fastighetsbestånd. Men om vi tittar framåtriktat så bedömer vi att vi kommer att ha hyresintäkter på drygt 1 miljard. Vi kommer att ha ett driftnetto på 835 miljoner. Ett förvaltningsresultat på 390 och ett NAV på ungefär 16 kronor. Net LTV, vilket är ögonblicksbilden, 54,8. Målbild under 55. Vi har en räntetäckningsgrad på 1,88. Kommer vi komma tillbaka lite grann till. En snittduration på 6,2 år och 13,7 miljarder i fastighetsbestånd. Beståndet ligger huvudsakligen som en banan över Sverige, men huvuddelen ligger i Stockholm och Mälardalen. Vi tycker att vi har en enkel affärsmodell. Kassaflöde är allt. Vi investerar i 4 typer av fastigheter. Lagerlätt industrilogistik, som är vårt största affärsområde. Sällanköpt handel. Hos oss är det dagligvaruhandel och lågpris, ingenting annat. Vi har även kontor. De flesta kontor hos oss är kommun, landsting, skattemyndighet etc. som hyresgäster. Och sen så har vi också offentliga fastigheter, vård, skola, omsorg enbart. Hållbarhet har vi jobbat rätt hårt med under vår korta tid. Vi jobbar successivt igenom vårt bestånd. Här är 3 axblock. Den längst till vänster är vårt kontorshus i Finnslätten som vi har byggt för Alstom. Här har vi sedumtak, biologisk mångfald. Vi har 2 stycken kåkar där vi har gamla oljepannor som vi har bytt ut till fjärrvärme i ena varianten och bergvärme i den andra. Med besparingar på mellan 40 och 60%. Tittar man på våran 15 i topplista, vi har som sagt bara funnits i 3,5 år, så är vi jättestolta över de 15 största hyresgästerna. De allra flesta är namnkunniga, mycket stabila bolag, det är myndigheter där vi ser att vi har en otroligt stark kreditvärdighet hos. Vi har en lite längre snittduration hos våra stora hyresgäster, ligger på 7,3 år och 6,2 i snitt. Det här är väl den roligaste bilden kanske då. Några av er har sett mig visa den här förut. Här är ett axplock av typfastigheter som vi äger. Längst upp till vänster, en kontorsfastighet. Här sitter Tyresö kommun. I mitten så har vi en typisk lagerlätt industrianläggning. Det här är en bilanläggning som ligger i Akalla-Kista med Bilia som hyresgäst. Har Mercedes-Benz återförsäljare. Alla de här har väldigt långa hyresavtal ska jag säga. Längst till höger så har vi en typisk offentlig fastighet. Här har vi Botkyrka kommun som driver 2 stora äldreboenden. Vi har Stockholms läns landsting som har ett antal enheter plus diverse olika specialenheter för olika typer av sjukvård. I mitten längst till vänster en typisk handelsfastighet. Här är väldigt typiska hyresgäster hos oss. Just den här ligger i Norrtälje vid Östra Knutbytorg. Här har vi Willys som dagligvaruhandel. Vi har Rusta. Den mittersta bilden, det har jag också sagt förut, ska vi byta ut. Där ser man inte vad det är. Där är det numera normal, typiskt lågpris. Sen har vi Jysk, typiskt lågpris, och Blomsterlandet, typiskt lågpris inom sin respektive nisch. Vi delar också den här handelsplatsen med bland annat Lidl som är också typisk lågpris. I mitten så har vi vår i särklass största fastighet, Finnslätten i Västerås. Här har vi hyresgäster som ABB, Alstom, Fortum med mera. Det var här också vi byggde det där kontorshuset som ni såg på bilden alldeles nyss. Det här är en väldigt speciell anläggning. Ni ser den här mitterska skeppet som är högt. Här kan man lyfta upp hela tågsätt, vilket man gör väldigt ofta. Unikt i sitt slag. Vi har dessutom andra typer av väldigt tung industri här. Vi har Fortum som optimerar våra kärnkraftsreaktorer, turbiner och även vattenkraftsturbiner. Rätt energikrävande historier där. Längst till höger så har vi ytterligare exempel på lågprishandel. Just i det här fallet en dollar står på vårt utvecklingsområde i Eskilstuna. Längst ner till vänster en typisk logistikanläggning. Här är Sveriges största möbeltransportföretag, undantaget Ikea. Ligger i Tibro och har legat där i, jag tror åtminstone 50 år. Var en gång i tiden ägt av DHL. I mitten längst ner, det är både produktion, det är lager och logistik för Rockwool. En av de stora aktörerna inom isoleringsmaterial i världen, eller åtminstone i Europa. Och längst ner till höger har vi vårt senaste tillskott eftersom vi från och med Q4 i fjol också integrerar Backaheden i vår balansräkning. Och just det där är då Santa Marias stora centrallager i Kungsbacka. Lite kort om projekt. Ni kanske har sett att vi skickade ut en pressrelease här för någon månad sedan eller 2. Vi har haft ett område som heter Hella Shopping. Som ni förstår så passar inte det alls in i vår affärsmodell. Det här är nämligen en galleria. Det är trippelfel för oss. Så under 18 månader så har vi jobbat med att tömma det här huset för att göra det precis det vi är bra på. Det vill säga fylla med lågpris. Just i det här fallet så är de 2 största hyresgästerna Motornet som är en finsk konkurrent till Biltema och Dollarstore. Och vi kommer inte vara en shoppinggalleria längre. Alla entréer kommer vara från framsidan. Precis som det var i Norrtälje. I mitten är det ett hållbarhetsprojekt har jag redan nämnt. Längst till höger kommer och Dollarstore i Eskilstuna. Här är ytterligare ett addering som vi har gjort till den sajten. Det här är då Blomsterlandet. På den här platsen som inte vi äger dock ligger även Biltema och en stor Ica Maxi. Så det är ett väldigt starkt handelsområde i Eskilstuna.
Jo, lite siffror. På resultaträkningen har vi våra intäkter som härstammar från allt som Mick visade. Väldigt stabila hyresgäster, stabila avtal, långa avtal, stora bolag, trygga intäkter. Hög bruttoresultat och i våra intäkter och kostnader så har vi även med allt som vi vidarefakturerar och avräknar. Så egentligen vårt rena bruttoresultat är ännu högre. Allt är i princip kopianpassat, 95% ungefär. Och vi har väl fått, förra året var det en kopianpassning på 10,8 och förra året var det typ 6,5. I år får vi se vad det blir. Men intäkterna är då inflationsskyddade. Trygg övre del av resultaträkningen. Central admin-delen är väldigt stabil. Det är ingenting som förändras utan vi anpassar ju vår kostym efter det som behövs. Det är finansnettot som har en tendens att svänga lite sista tiden. Som det ser ut nu så kanske vi har kommit till en position där vi har nått en sämre position och nu är vi på väg mot bättre tider. Till höger ser vi lite hur resultatet och intäkterna har förändrats sedan vår notering. Från intäkter på 28 miljoner till någonting helt annat på kvartalet. Och även vår intjäningsförmåga som vi har bedömt och den följer det vi har levererat. Absolut.
Om man jämför Q1 med Q1 så kan man tycka att det ser konstigt ut. Men det beror också på att vi har nettosålt väldigt mycket under förra året och även slutet på året innan. Som en kommentar.
Intjäningsförmågan från 1,1 miljarder total hyresvärde så har vi ett förvaltningsresultat på 390. Känslighetsanalysen plus minus 10% i driftnetto plus minus 1 procentenhet i Stibor. Idag ligger vi där. Och vi ser att det finns ju tryggt avstånd till även högre räntor. Våra finansiella mål till höger är inom spannet som vi vill ha dem. ICR, räntetäckningsgraden, är lägre än vad vi önskar ha den. Vi har valt att behålla vårt mål på 2,25 långsiktigt, för vi anser väl att det är där vi ska vara, och vi kommer komma dit på ett eller annat sätt, antingen KPI-justerat eller att räntorna går ner eller att vi är räntesäkra, men på något sätt kommer vi komma dit. Vi har kommit ner till 1,88 nu efter all turbulens på räntemarknaden, vilket jag i alla fall anser att det är väldigt starkt för ett bolag som har växt så snabbt och inte heller haft möjligheten att räntesäkra sig. För tittar man på våra intäkter som motsvarar förstås våra tillgångar, så 2021 när räntorna var låga så ägde vi inte så mycket för att kunna räntesäkra så att man har låga räntor på till säg 50% av portföljen idag. För vi ägde inte de tillgångarna. Så 1,88 är en bra siffra efter allt som har hänt.
Sen kan man väl också säga, beroende på vilken syn man har på saker och ting, om man vill vara en riktig dysterkvist, då tror man att vi är dåliga på förvaltning. Vi tappar 10% av driftnetto. Och Riksbanken kommer byta fot fullständigt. Kommer vi ha ett förvaltningsresultat på 266. Om man är lite mer positivt lagd, tror att vi är duktiga på det vi gör och att Riksbanken är snälla och marknaden är snäll och sänker Stibor, så hamnar vi på 515.
Balansräkningen. Det är väl 2 viktiga saker i en balansräkning, förutom likviditet. Men det ska man inte behöva tänka på så mycket. Det ska bara funka. Tillgångsmassan. Vi värderar våra fastigheter varje kvartal externt. Det innebär att
alla fastigheter också.
Alla fastigheter varje kvartal externt. Vi har sänkt våra värderingar 7 kvartal i sträck nu. Och vi har sålt i princip nästan varje kvartal någonting. Och förra våren sålde vi ganska stor portfölj. Och i princip har vi sålt på bokfört värde lite under, lite över. Det vill säga bokfört värde. Det vill säga att vi har likvida tillgångar. Så vi är inte i en position där vi har övervärderade fastigheter där vi inte kan sälja om vi behöver det. För då får man en nedskrivning i hela fastighetsbeståndet och helt plötsligt är ekot utraderat. Det är inte vårt fall. Vi har sålt som sagt i 7 kvartal och vi har sålt i princip varje kvartal någonting. Ja. På bokfört värde.
Man kan väl kommentera också bara här för den som tycker att det är kul att titta på siffror. Det ser ut som att vi hade 13,3 miljarder i balansen i utgången av mars i fjol. Det är inte riktigt hela sanningen, för vi sålde 2 större portföljer typ sista mars. Och det här är brytpunkten. 31 mars klockan 23:59. Och det syns då om man tittar på kassan att det har hänt någonting Q1 i fjol. Då vi hade 518 miljoner, va? Mm. Vilket var en ovanligt stor kassa.
Det är på tillgångssidan. På skuldsidan så ser vi att vi har nu korta lån på 460 miljoner av totalt 7,8 miljarder ungefär. Det vill säga en väldigt liten kort finansiering och en väldigt liten refinansieringsrisk. Vi har hanterat alla våra förfall och även en del av de där 463 miljoner är redan hanterade och bara väntar in sin slutdatum för att läggas om. LTV:n och net-LTV:n ser vi här är ungefär där vi vill ha den, strax under 55%. Och då ska vi tänka på att vi är på 55% även när vi har skrivit ner våra tillgångar. Vi har skrivit ner dem väldigt mycket och ändå är vi på 55%.
Ska man nämna någonting om värderingarna också, kan man säga att när värderingarna stod som högst för oss som bolag så hade vi en snitt-yield på ungefär 5,3%. Idag ligger vi på över 6%. Samtidigt så har vi fått ungefär 18% i justeringar på hyra för 2022s KPI och 2023s KPI. Så jämför man en krona med en krona så kan man konstatera att en krona idag värderas ju, det är ingen underdrift att säga, väsentligt lägre än vad den gjorde när allting stod på toppen. Jag har inte räknat ut exakt, men det är en bra bit över 20%.
Men den här beskrivningen visar att ekot i bolaget, det vill säga substansen, är riktig. LTV, net LTV, igen. Stabila värden. Vi har som sagt skrivit ner värdena från ungefär här, va? Någonstans. Ja, och ändå så har vi LTV-nivåer som är stabila. Refinansieringsrisken ser vi här. Och i princip så är allting bankfinansiering med 3 av de stora svenska bankerna, ett antal sparbanker ute i Sverige och sist har vi väl också den obligationen på 500 miljoner som vi gjorde förra året i september. Man kan väl tycka varför man ska vara ute på obligationsmarknaden, men det är viktigt att ha olika finansieringskällor, inte bara bankfinansiering. Den här gången var det kapitalmarknaden som kraschade, nästa gång kanske det är bankmarknaden som kraschar. Så vi måste vara på alla marknader som har pengar och så att de investerare som finns där känner till oss. Så kapitalmarknaden är en viktig plats att vara på i Sverige.
Och som du alltid säger, Thomas, kapitalet är vår absolut viktigaste
insatsvara. Det är det vi har i lager. Och det kostar pengar, räntorna. Så man måste behandla det på det sättet också. Det är vad vi lager för. Pengar.
Vad kom ni ut på i september?
Ursäkta?
Vad kom ni ut på i september?
Vad fick du låna? 600 punkter plus Stibor. Vår obligation handlas på drygt 400-425 punkter idag. Och det är en liten handel på den. Ja, men en obligation, det är därför man måste behandla obligationer med respekt. För det är körsbär på tårtan, det är inte tårtan som många har behandlat det som. Utan den använder du för att investera i dina projekt, i bra transaktioner som har stort övervärde. Du kan inte använda det för att köpa samhällsfastigheter som gildar 4,5 och betala 600 plus Stibor för det.
Och bankfinansiering, hur mycket vill göra det?
Bankfinansiering är i princip 2 procentenheter plus Stibor. Sen är det plus minus runt 2 beroende på tillgångsmassan, kapitalbindningstiden.
Man kan väl också säga att när vi gjorde obligationen så blandar man tur och blandar man otur. Vi tog ju rygg på 2 av våra branschkollegor för det var första gången vi emitterade en obligation på marknaden. Först gjorde MP3 en på 525. Sen nästa talare, Stendörren, gjorde en på 525. Det som hände mellan när de 2 gjorde sina obligationer och vi gjorde våra var att amerikanska 10-åringen steg med ungefär 50 punkter. Och vi hamnade då på 600. Vi skulle ha hamnat 25 punkter högre ungefär än vad våra kollegor gjorde eftersom det var första gången vi emitterade. Men det blev lite mer och det tror jag i mångt och mycket beror på att amerikanska 10-åringen drog iväg så in i bänkt just precis när vi skulle gå ut i marknaden.
Och ICR har vi pratat om. Den har stabiliserat sig på strax under 2 gånger. Vad kan man säga mera? Genomsnittsbindningstiden på våra pengar, 2,5 år. I Sverige får man i princip 3-åriga pengar, kanske lite 4. Ja, en minut. En hel minut. Och sen vår ägarlista. Där Stenströms Holding, vilket är jag och min bror, är största ägare, 25%. Och sen har vi Fastighetsbalder, Öresund, Länsförsäkringar och ett par till under det. Väldigt stabil ägarlista och så har den sett ut väldigt länge. Inga stora förändringar där.
Det som vi tycker är lite sådär, om vi pratar om körsbäret på tårtan, det är att vi råkar ju faktiskt ha både Öresund och Creades i vår ägarlista, vilket jag tror är rätt ovanligt just nu. Det tycker vi är extra kul.
Och så, jag tror att
ja, men tack.
vi kan gå över till nästa fas av den här...
Frågefasen.
Ja.
Nej, men jättebra, tack så jättemycket. Jag tänker att vi kan börja i hyresmarknaden. Och som ni nämnde så har vi haft ganska starka indexjusteringar och hyreshöjningar den senaste tiden, 20% nästan. Finns det risk att hyresgästerna inte hänger med? Kan ni se sånt i diskussionerna med era hyresgäster att det är lokaler som är överhyrda eller att det finns press på hyrorna framåt?
Ja, vi kan väl titta på våra lite fastigheter, vad vi har, men det kan du kanske ta.
Ja, nej, men man kan väl svara på frågan så här. Vi har ju precis som alla andra också drabbats av ett par konkurser. Vi har ju aldrig gillat paddelhallar, men när vi har förvärvat både Maxfast och Randviken så fick vi med oss några paddelhallar. Och de har vi successivt försökt trycka ut och någon har gått omkull. Så att det är klart att vi också har en liten skärva av konkurser, men om man pratar om hyresgästerna klarar av de nya hyresnivåerna skulle jag säga det gör våra hyresgäster. Och tittar vi på det vi har gjort i Hella Shopping där vi faktiskt tar bort gallerian, vi utökar ytan med 15% och vi har väsentligt högre hyror
och så är många
än vad vi hade innan. Det blir en rätt bra ekvation på den.
Och många av våra hyresgäster, vissa av dem är de som är ansvariga för var KPI:n hamnar, till exempel stat och kommun. Och sen multinationella bolag, lågprishandel.
Vi ser en trend med att många lågpriskedjor etablerar sig i Sverige och att det är liksom en tillväxttrend. Hur går det i era dialoger med till exempel Dollarstore eller andra liknande aktörer att bygga nytt?
Dollarstore fick ju en ny ägare här för vad det nu är 6, 7, 8, 9 månader sedan. Där Tokmanni gick in och köpte ut Dollarstore från grundarna. En mycket, mycket starkare ägare, vilket vi som fastighetsägare tycker är positivt. Och de har ju inte gått in och köpt Dollarstore för att inte göra någonting. De vill ju trycka på gasen. De vill förändra var man finns någonstans och de vill ha fler butiker. Lite grann som om man tittar på Normal som för första gången någonsin öppnade en big box som våra handelsplatser kallas för. Det gjorde de hos oss och de var tvungna att ta in vakter för att det var för hårt tryck på folk som vill in i butiken. Då pratar vi om en handelsplats lite utanför Norrtälje. Och en vanlig vardagsmorgon. Så att det finns stor efterfrågan på lågpris i Sverige.
Och det kanske leder oss in på projektsidan där ni har annonserat en del nya projekt här under våren. Vill ni ni har redan visat bilder på det, men kanske prata lite om hur diskussionerna och efterfrågan i marknaden är efter projekt och även om hur lönsamheten på projekten är nu kontra kanske för 6-18 månader sedan.
Ja, alltså vi är ju väldigt picky med våra projekt. Alltså har vi inte minst 10 år, har vi inte en väldigt trygg motpart, då gör vi inget projekt. Det är samma sak, man kan titta på vår ytvakans är relativt hög idag, den är runt 10%. Vår enskilt största vakans har vi nere i Malmö, en fastighet som heter Värmet, den är helt tom. Det är klart att vi kan hyra ut där, men för oss är det jätteviktigt att det är rätt kund, rätt tid och att de faktiskt har råd att betala hyran. För har vi en kund som börjar släpa med hyran, vad hamnar det då någonstans? Det hamnar i vårt knä. Vi ska driva process mot dem och det tar jättemycket tid och kraft från övrig verksamhet. Så i möjligaste mån så vill vi välja hyresgäster som vi gör bedömningen av att de är starka och stabila.
Plus att byggmarknaden är mycket mer stabil nu. För 2021 när det var som enklast som fastighetsbranschen så fick man ju be i princip om en offert. De tiderna är förbi.
Nu är det tvärtom. Får vi lämna en offert?
Går det att säga någonting om yield on cost på projekten som går att sjösätta idag?
Nej, men alltså, allting bygger på marknadshyra givetvis. Vi ska ju ha någonstans 20% i marginal i alla fall när vi gör det. Och sen kan man ju säga att 20% i marginal during the heydays levererar ju plus minus noll om den är klar i år. 20% idag kanske levererar 20% eller kanske något mer när det väl är klart.
Ja, vi skulle kunna ta kanske en sista fråga på finansiering också och ICR där som ni visade och diskuterade lite. Hur viktigt är det att skynda sig till att nå målet kontra att kanske prioritera andra delar av verksamheten på ICR?
Du tänker målet på långsiktigt över 2025?
Ja.
Målet är riktning som vi ska hålla oss mot. För försöker man inte nå 2,25 så kommer man ju nå något lägre istället. Så vi tittar på 2,25 och till och med över det. Men det är inte viktigt att nå det idag. Det viktiga är förstås att hålla sina kovenanter och hålla sig på en betryggande nivå så att man kan bedriva verksamheten tryggt. Så vi tittar på att nå 2,25 och över det. Men det är inte så att vi offrar vår kortsiktiga intjäningsförmåga för att nå det. Genom att till exempel räntebinda på dåliga nivåer och mer än vad vi behöver. Vi har trots allt 40% redan bundet idag, så det är 60% som inte är bundet. Vilket innebär om räntorna går ner så har vi en uppsida i förvaltningsresultatet.
Tydligt, tack. Jag tänker ni kan ta lite frågor utanför här. Jag tror att vi har slut på tid. Men så får jag tacka både för att ni var här idag och alla som har lyssnat.
Tack så mycket.
Tack allihopa.
Mitt namn är Viktor Rud Stenlöv och är fastighetsanalytiker här på ABG Sundal Collier. Och idag har vi med oss Erik Ranje från Stendörren Fastigheter. Och jag gör så att jag lämnar över ord och bild till Erik för presentation i ungefär 20 minuter. Och sen kör vi en frågestund efteråt. Varsågod Erik.
Tack så mycket. Och Erik Ranje då som sagt vd för Stendörren sedan ungefär 4 år, lite drygt 4 år. Vi är då ett börsnoterat fastighetsbolag verksamma inom lager, logistik, lätt industri. Våra fastigheter är nästan uteslutande belägna i Mälardalen. Ungefär en tredjedel i Stockholms stad, en tredjedel övriga Storstockholm och en tredjedel övriga Mälardalen. Så att det är en väldigt urban portfölj belägen i en tillväxtregion då, både ekonomiskt och populationsmässig tillväxtregion. Fastigheter för ungefär 12,5 miljard i ett högavkastande segment med långa avtal, så vi har en transparens och visibilitet i kassaflödet. Förhållandevis låg belåningsgrad, 50%. Vi har en uthyrbar yta på 810 000 kvadratmeter och en förhållandevis stor då byggrättsportfölj på 640 000 kvadratmeter ungefär, så vi kan växa ordentligt inom befintligt bestånd. Stendörren har funnits i ungefär 10 år, avknoppades från ett annat fastighetsbolag och har växt successivt nästan uteslutande genom förvärv över tiden. Men under de senaste åren då, när jag kom in i bolaget, så har vi försökt accelerera tillväxten i bolaget. Både på förvärvssidan genom att expandera lite nya marknader, Oslo, Köpenhamn, Helsingfors. Men framförallt så har vi accelererat vår fastighetsutvecklingsverksamhet. Vi har färdigställt ungefär 30 000 kvadratmeter lätt industri och logistik under de senaste 4 kvartalen. Och har pågående projekt på ungefär 55 000 kvadratmeter med en driftsnettopotential på ungefär 75 miljoner kronor i takt med då uthyrning och färdigställande. Vad är det då som gör Stendörren intressant ur ett investeringsperspektiv? Ja, vi har ett väldigt stabilt och transparent och långsiktigt kassaflöde, starkt kassaflöde. Vi är ett högavkastande segment, vi har långa avtal, vi har en väldigt diversifierad hyresgästbas. Vi har egentligen bara en hyresgästkoncentration och det är från den 1 oktober flyttar ju Fortifikationsverket in i våra lokaler som idag hyrs ut i Coop, och Fortifikationsverket kommer då stå för ungefär 9% av vårt hyresflöde, och det är vår största koncentration, det vill säga svenska staten. Näst största hyresgästen är på 2% och sen taktar det ner. Dessutom från olika verksamheter. Vi har både lite kommunal risk, vi har Bactiguard som är ett medtechbolag, vi har Unilever som ni alla känner till vad det är för stort bolag. Vi har ett tryckeri, vi har verkstad. Så att det finns en väldig transparens, diversifiering i det starka kassaflödet med långa hyresavtal. Men vi är också i ett tillväxtbolag. Våra fastigheter är ju då belägna i vad som väl är Sveriges tillväxtmotor, nämligen Mälardalen, och en tredjedel ungefär till och med i Stockholms stad. Där vi har då en ekonomisk och populationstillväxt. I vår utvecklingsverksamhet så bygger vi logistik, vilket är ett e-handelsderivat. Även om det har varit lite lägre tillväxt inom e-handel, så inte desto mindre långsiktigt så är det en tillväxtpotential. Sen har vi det här som är väldigt speciellt i det här tillgångslaget i de här lägena. Jag brukar ofta nämna, tänk Hammarby Sjöstad som blev bostäder var ju en gång i tiden Lugnets industriområde. I de mest urbana lägena så konverteras det från verksamhetslokaler till exempel bostäder. Det vill säga det försvinner utbud medan efterfrågan ökar. Och när utbudet minskar och efterfrågan ökar, ja, då stiger priset på den underliggande tillgången, vilket är i vårt fall hyror. Så tittar man i våra kvartalsrapporter så kommer man se att vi successivt kvartal för kvartal har de hyror vi har sagt upp för omförhandling har vi omförhandlat på 20-25% högre hyra. Det var för första gången lite svagare, nämligen i Q1 i år var det på 9%. Men inte desto mindre, vi har en underliggande hyrestillväxt i vårt bestånd. Och det skulle jag säga är ju unikt att ha den typen av hyrestillväxt. Och det gäller för det här tillgångslaget i den här typen av urbana lägen. Vi har en fastighetsportfölj, en byggrättsportfölj på 640 000 kvadratmeter, vilket jämfört med vår uthyrbara yta på 810 000 kvadratmeter. Vi har möjlighet att bygga och utveckla ungefär 80% fler kvadratmeter inom befintligt bestånd. Och det är förhållandevis enkelt i bemärkelsen att konceptuellt enkelt. Vi har en stor markplätt där det finns en liten huskropp. Vi kan helt enkelt förtäta och bygga mer. Vi har huvudsakligen säkerställd bankfinansiering, men vi har lite kapitalmarknadsfinansiering som ett komplement. Vi har en god likviditet när vi gick ut i Q1, 650 miljoner kronor ungefär. Vi har 80% av våra räntebärande skulder säkrade med en Stibor motsvarande 1,4%. Med en löptid på återstående, jag tror att det är 3 år. Så att även på finansieringssidan så har vi en långsiktig transparens och stabilitet. Lite kort om senaste kvartalet. Vi har haft en driftsnettotillväxt på 7% kvartal mot kvartal, alltså Q1 mot Q1. Vi har under de senaste åren, för ni som har hört mig prata förut, vet att vi har sänkt vakansen väldigt bra under de senaste åren. När jag började i bolaget var vakansen drygt 10%, 12-13%, och sen gick vår näst största hyresgäst i konkurs, så blev det runt 15%. Vi har haft en positiv nettouthyrning nästan varje kvartal och successivt sänkt vakansen väldigt bra. Q3, Q4 förra året så hade vi lite negativ nettouthyrning, men på Q1 i år så har vi positiv nettouthyrning. Så vi har sänkt vakansen successivt. Vi har omförhandlat på högre hyra, det vi har sagt om omförhandling 9%. Vi har en 7% i vakans, vilket ju är historiskt bra. Vi var nere och bottnade på 5%, men det är ju lite tuffare konjunktur nu. Vi har haft en väldigt fin överskottsgradsutveckling. Vi började ju för 4 år sedan på drygt 65%, nu på knappt 80% överskottsgrad. Och för de som inte är så familjära med fastighetslingo, det är fastighetsbranschens motsvarighet EBITDA, marginal helt enkelt. Och det är en konsekvens, eller tack vare, både en topline-utveckling som har varit väldigt bra, men vi har hållit hårt i våra kostnader också. Vi har några hållbarhetsbilder att visa, eller jag har några hållbarhetsbilder att visa. Vi har sänkt energiförbrukning per kvadratmeter med ungefär en tredjedel under de senaste 6 åren. Vi har ju haft fastighetssektorn har ju varit föremål för omvärdering av fastighetsvärdena så att säga. Det belastar vår resultaträkning. Det blir förhållandevis stora tal. De senaste 12 månaderna har vi skrivit ner våra fastighetsvärden med ungefär 400 miljoner, och det belastar naturligtvis avkastning på eget kapital och NAV-tillväxten därför att det går över resultaträkningen. Men en hög andel räntehedgning. Vi var tidigare ut med räntehedgning för 2,5 år sedan före Ukraina-kriget, när det började bli tal om inflation och eventuell ränteuppgång, så tecknade vi väldigt mycket kappar, räntetak, alltså kostade oss nästan ingenting, för alla trodde att det bara var temporär ränteuppgång, men det visade sig väldigt bra, så har vi gjort ytterligare lite räntehedgningar sedan dess. Vi har reducerat vår kapitalmarknadsbaserade finansiering. Det är ju förhållandevis dyrt, med 500 miljoner under förra året, och förra veckan så gjorde vi en ny hybridobligation. Så det beloppet som var utestående var på 513 miljoner. Den nya vi gör då för att refinansiera på 300 miljoner. Så vi tar uppenbarligen ner den dyra kapitalmarknadsfinansieringen ytterligare. Och en stark likviditet på 650 miljoner när vi gick ut ur Q1. Vi har, jag kan ta den här med en gång. Jag nämnde att vi har tagit ner vår energiförbrukning med ungefär en tredjedel per kvadratmeter under de senaste åren. Och ja, det driver ju koldioxid, så att säga, energiförbrukning. Det vill säga vi har tagit ner energiförbrukningen också, eller förlåt, med koldioxidutsläppen också med ungefär en tredjedel. Det är i takt med besparingar, alltså vi har förbrukat mindre enheter, men vi har också gått över till mer förnyelsebara energikällor. Det här är ett exempel på vårt hållbarhetsarbete. Jag kan ju visa den här bilden nu på ytterligare andra lite exempel som vi gör inom nybyggnation. Naturligtvis på energisidan, om vi fortsätter där. Solceller och bergvärme använder vi, eller bygger vi med. När vi bygger så använder vi mindre koldioxidbelastande byggmaterial. Till exempel har vi byggt med trästomme i några projekt, och sen så vad gäller både betong och asfalt så finns det alternativ som är mindre koldioxidbelastande. Och det här har gjort att vi lanserade en hållbarhetsstrategi 2021 tror jag det var, där vi var långt före. Det har visat sig att vi var på väg att uppnå många av våra mål långt i förtid. Så det gjorde att vi nu i förtid har uppdaterat vår hållbarhetsstrategi. I många hänseenden, men det vi har försökt åstadkomma är ökad mätbarhet, lite tydligare mål och högre ambitioner framför allt. Och bland annat då adderat att vi ska vara koldioxid då, netto noll på koldioxid till 2030. Svårt med 2040. Om vi blickar lite framåt då. Vi har ju det största som har hänt i bolaget under de senaste, låt säga 12 månader, är att vi gjorde den här otroligt fina uthyrningen till Fortifikationsverket den 22 december förra året. Vi har vetat att Coop ska lämna oss, som står för 9% av hyresflödet under ett antal år, och jobba hårt med den uthyrningen. Vi lyckades då hyra ut 129 000 kvadratmeter till Fortifikationsverket, och Fortifikationsverket tillträder den 1 oktober, alltså dagen efter att avtalet med Coop löper ut, vilket är ju fantastiskt på villkor som är, jag brukar säga, obetydligt bättre. Så det är absolut bra villkor. Det är i takt med våran likviditetsposition, att vi har säkrat en anständig kapitalkostnad genom våra räntesäkringar. Det gör, och att vi har en fin projektpipeline, gör att vi vågar vara lite mer offensiva framöver. Vi är förhållandevis optimistiska generellt sett vad gäller marknaden. Men på förvaltningssidan så handlar det om att naturligtvis våga driva hyrestillväxten och omförhandla lite hårdare. På fastighetsutvecklingssidan, ja, vi har ju ungefär 50 000 kvadratmeter i pågående projekt som vi tar till marknaden för att hyra ut och bygga. Och en del bygger vi då redan naturligtvis. Och sen har vi ytterligare en framtida projektpipeline som vi arbetar med. På förvärvssidan så är vi också förhållandevis optimistiska och tittar nu på att förvärva igen och framförallt bygga kritisk massa på våra nya marknader. Vi gick in i Oslo, Köpenhamn, Helsingfors för de senaste åren. Eller för några år sedan. Och det var för att det var så pass konkurrensutsatt i Stockholm och kände att vi vill växa återigen i verksamhetslokaler i urbana lägen, men det var för dyrt i Stockholm. Försöker vi hitta motsvarande affärer i Oslo, Köpenhamn, Helsingfors, och det har vi lyckats ganska bra med, framförallt i Köpenhamn. Där har vi väl nära en kritisk massa, men det är det vi vill prioritera då, att bygga kritisk massa där vi är förhållandevis små. Så det var nog det enda. Eftersom vi har mycket tid kvar så skulle jag gärna ge ett exempel på lite mer konkret hur vi arbetar med fastighetsutveckling. Här har vi ett område som ligger precis nära Södertälje, eller utkanten av kan man säga, som heter Almnäs. Den här fastigheten köpte vi 2015 av Peab, som i sin tur hade köpt det från försvaret, Fortifikationsverket. Här har vi då haft, när vi tillträdde, 27 500 kvadratmeter lokaler i väldigt dåligt skick till en väldigt låg hyra med väldigt hög vakans. Och här successivt nu river vi och bygger nya fina verksamhetslokaler, både lätt industri och logistik. Och när vi är i mål med detta, då har vi ökat exploateringsgraden från 27 500 kvadratmeter till 80 000 kvadratmeter. Vi bygger huvudsakligen pre-let. Det vi har byggt hittills är fullt uthyrt. Så vi utgår från att vi har i allt väsentligt fullt uthyrt till en hyra som är väl dubbelt så hög som den som en gång i tiden var. Och det gör att här kommer vi kunna öka driftnettot 7 gånger i förhållande till där vi var då när det här köptes. Och det här är ju någonting vi ska jobba med i framtiden, men vi har också kommit en bra bit på vägen. Jag kan visa de här 2 huskropparna. De har vi redan byggt på spekulation och varenda kvadratmeter är uthyrd och väldigt fina hyror. Halva den här huskroppen, den här bygger vi i 2 steg. Halva har vi byggt 12 000 kvadratmeter som vi har hyrt ut till ISAB, Industriservice i Södertälje AB, återigen fullt uthyrt. Så av de här 80 000 kvadratmeterna som vi siktar på så har vi hyrt ut ungefär 18, så har vi byggt och hyrt ut varenda kvadratmeter 18 000 kvadrat. Så att det här är inte någonting som så där, någonting vi tänker oss att göra någon gång i framtiden, utan detta gör vi här och nu. Och det har visat sig vara väldigt bra kalkyl, bra efterfrågan, varenda kvadratmeter uthyrd. Så det tänkte jag var ett lite mer konkret exempel på hur vi jobbar på fastighetsutvecklingssidan. Och det var det jag tänkte säga.
Ja, inte bara det, du ska få svara på lite frågor också.
Gärna.
Men vi kan väl kanske börja i förvärv där. Du nämnde att ni finns på lite olika marknader, inte bara i Mälardalen, även om det är tyngdvikten. Vad är det för olika yielder i de andra marknaderna som ni också har fastigheter i och tittar på relativt till Stockholm?
Ja, men det har varit, om du tänker på de utländska marknaderna, så ja, det är väl 100 punkter över ungefär, lite beroende på. Både Köpenhamn och Finland är ju liksom Euroland. DKK är ju knuten till euro. Och det har varit 50-100 punkter högre. Oslo, kanske inte riktigt så mycket bättre avkastning. Men det har varit bättre avkastning. Och det tror jag är naturligtvis efterfrågestyrt. Alltså den svenska transaktionsmarknaden brukar lite slarvigt vara nästan lika stor som de övriga 3 nordiska länderna tillsammans. Så att det finns ju en bättre likviditet och dessvärre då konkurrens i Sverige. Men sen är det ju uppenbarligen ju större så att säga marknad, desto fler möjligheter. Och har vi adderat 3 marknader till så finns ju större möjlighet att göra bra affärer. Och det har gått väldigt bra, framförallt i Köpenhamn. Det är 12 fastigheter som vi har köpt där och vi är otroligt nöjda med det. Det har varit fantastiska förvärv.
Och sen om vi går vidare till projektutveckling. Ni har en stor byggrättsportfölj och när ni hyrde ut Fortifikationsverket eller den Green Hub som ni har så fick ni in ett ännu större intresse på, jag vet inte, vad var det, 500?
Ja, precis.
Vi ska inte fastna i den siffran, men den var oversubscribed.
Och väldigt mycket. Alltså, bara för publiken, Coop-fastigheten som det hyrs ut i Fortifikationsverket är på 129 000 kvadratmeter. Och det är svårt att få perspektiv, men det är ungefär 18 fotbollsplaner. Så att det är ju en gigantisk, det är en av Sveriges största logistikfastigheter, huskropp då. Och det som du refererar till är det vi skriver i pressmeddelandet, att vi har haft visningar och liksom, konkreta diskussioner på väl över 500 000 kvadratmeter. Så att det har ju varit en väldigt stor efterfrågan, både på att hyra ut helheten men också, vi tittar också på att dela upp lokalerna, så vi har haft visningar på delar av lokalerna också.
Men det visar ju ändå att det finns ett stort intresse för den geografin och era liksom, typer av fastigheter. Och då är min fråga, när ni ska driva projektutvecklingen, vilken typ av projekt är det som är mest attraktivt och det ni kommer göra mest av framöver? Är det större nyproduktion eller är det hyresgästanpassningar och utbyggnationer?
Ja, men det är framförallt nyproduktion, absolut. Vi har ju, jag kan gå till den sidan här. Det här är vad vi refererar till så som framtida projekt. Och det här är, så att säga, det är inte markplättar som inte är detaljplanerade, utan detta är fastigheter som är där detaljplanen säger verksamhetslokaler, så att säga, lättindustri och lager. Må vara att det finns någonting här som kräver detaljplan, justering eller ändring. Men i grund och botten så är det lätt industri, logistik, nyproduktion. Det är bulken av det. Det här är ju våran, så att säga, lista, och som ni ser det är ju Mälardalen i bra lägen normalt sett. Det här är vår lista över framtida projekt. Sen har vi ju de pågående projekten och nu står det dessvärre inte kommunerna där. Men det är Högdalen och det är i Enköping, det är i Södertälje, det är i Upplandsbro, det är i Södertälje igen, det är i Enköping, det är i Upplandsbro och det är i Bromma. Om vi ser på den övre tabellen där. Så det är väldigt fina lägen där vi är i ett läge allt från att vi de facto att vi har kanske ett bygglov och ut och marknadsför, och när vi hittar en hyresgäst så bygger vi specifikt för hyresgästen. Så det är det läget att vi är ute och marknadsför, men det är också att vi är i produktion. Om vi tar den som ligger näst överst på listan i Enköping så kommer vi vara klara i slutet på året här att ha byggt ungefär 10 000 kvadratmeter för Advania. Så det är en pre-let då där vi är i produktion.
Sen har ni ett mål på en tidigare slide visade detta också på att nå en avkastning på eget kapital om 12%.
Ja.
Där är det är få fastighetsbolag som når dit idag, ni gör det inte heller. Men kan du bara beskriva kort vad det är som behöver hända för att ni ska kunna nå det målet?
Ja, det finns ju en nackdel med det där med det måttet, och det är ju det att det påverkas ju av omvärdering IFRS, omvärdering av fastigheter, och därför så man vill ju ha ett mål som gärna ligger nära aktieägarnas intresse å ena sidan, och å andra sidan om vi gör ett fantastiskt arbete men marknaden går så pass att fastighetsvärdena skrivs ner med någon procent bara, ja då är liksom den bokföringsmässiga vinsten och resultaträkningen den är utraderad så att säga. Men det är egentligen summan av både att vi har en hyresgäst eller en tillväxt i hyrorna, och den finns verkligen som en kärndel i vårt bestånd, därför att vi har verksamhetslokaler i urbana lägen. Jag nämnde ju Hammarby Sjöstad, Lugnäs industriområden, men också Hornsbergsstrand på Kungsholmen och andra sådana lägen som konverteras till exempel bostäder. Ja, utbudet minskar, efterfrågan ökar, så vi har en väldigt fin hyrestillväxt. Vi har haft en modell där vi har förvärvat på väldigt bra lönsamhet. Vi har köpt enstaka fastigheter off-market, det vill säga vi har inte köpt stora portföljer i konkurrensutsatta auktioner, och för det tenderar att vara väldigt dyrt. Så vi har lyckats köpa fastigheter på ungefär 100-150 punkter högre avkastning än om det hade varit konkurrensutsatta portföljaffärer. Och sen är det ju fastighetsutvecklingen helt enkelt. Så det är de tre komponenterna som att vi ska komma upp i en bra avkastning. Och bara för att liksom relatera, vi har haft en tillväxt i vårt driftnetto på, jag tror det är 11,3% on a compound basis under de senaste åren. Och då har vi trots allt haft lågkonjunktur å ena sidan, å andra sidan hög inflation som har hjälpt oss, men inte desto mindre över 11% tillväxt i driftnettot under de senaste åren, och då har vi inte tagit in pengar från aktiemarknaden under den tiden.
Jag tänker, vi har inte så jättemycket tid kvar, men jag tänker att i er senaste rapport så hade ni en försäljning och en fastighet till Trafikverket som stökade till det lite med som tillfälligt höjde skatten som Sten hade betalat. Vill du bara ta tillfället att förklara vad det där var för någonting? Ja, men det är i Botkyrka där E4 då går genom Botkyrka, så har vi en verksamhetsfastighet, egentligen 2 huskroppar som ligger precis där E4 ska breddas. Och en del av fastigheten måste rivas av det skälet, och vi hade kunnat så att säga, få den exproprierad, men det valde vi istället att göra det snabbare och enklare, så får de köpa fastigheten av oss. Så att egentligen så vi är inte säljare av fastigheter, vi bygger och köper för att långsiktigt äga. Men den fastigheten delvis skulle rivas, och det kommer vara väldigt mycket stök och ombyggnationer i området, så Trafikverket ville köpa den. Och svenska staten, som ju Trafikverket är, de gör ju aldrig bolagsaffärer, utan de gör fastighetsaffärer. Det triggar ju då en skatteeffekt helt enkelt, som stökar till analysen för sådana som dig. Och aktieägare också kanske. Ja, men fint. Jag tänker att vi stannar där och tackar Erik så jättemycket för presentationen. Tack så mycket.
Welcome back to ABG Investor Days. My name is Simon Jönsson, analyst here at ABG. Next up, we have the honor to welcome Simon Göthberg, CEO of Vestum. And with that said, I leave the floor to you, Simon, and I will come back for a Q&A at the end.
All right, good to be here. Thank you so much. As mentioned, my name is Simon Göthberg, CEO of Vestum, and also one of the co-founders of the company. I'd like to start today's presentation by talking a little bit about why we do what we do. We operate in a large and growing market, the infrastructure sector, which is driven by climate change, urbanization, more complex societies, and underinvestment. Today we have public spending in Sweden amounting to approximately 75 billion per year, and that has been growing by 4% of the last 15 years. And the biggest part of this is coming from water infrastructure, and that amounts to 20 billion and has been growing by 9% of the last 15 years. And there's been a shift in customer behavior in this sector of the last sort of 10 to 20 years, where a thing of the past was the one-stop shop. Customers wanted everything from the same supplier. But as requirements and demands have increased in digitalization, sustainability, and reporting, suppliers need to be more specialized. And we think that the winners in this sector will be the most specialized suppliers that can maintain a high degree of specialization. So we have created a platform and an organization that is best in class in identifying, acquiring, and developing leading suppliers in infrastructure. Now, Vestum today, we focus on acquiring and developing leading niche players in infrastructure. We operate in 4 countries, Sweden, Norway, Denmark, and the UK, with Sweden and the UK being our biggest markets. We operate in 3 segments: water, services, and infrastructure. In infrastructure, we perform specialized tasks outdoors, mainly railway services, but also other specialized tasks in tunnels, bridges, roads, etc. In services, we work indoors with property owners in energy efficiency measures, mainly installation work, but also different types of products. And in the water segment, which is roughly 1/4 of our profits today, we have market-leading product technology specialists working to improve water infrastructure. And this is mainly with water pumps, water filters, irrigation systems, and so forth. And this is also our fastest growing segment. We have spent a lot of our time in the last 18 months to reduce our financial net debt. The first 18 months of Vestum in 2021 and 2022 were extremely acquisitive. Inflation rates were low, interest rates were low, and we took advantage of that and acquired many, many companies, which today brings us up to 5.7 billion in sales and profits of roughly 600 million. But the last 18 months have been focused on reducing debt, and we're now at 2.5 times EBITDA, which is this figure here. And that means that we're within our financial target in terms of leverage, which also means that we're now acquisitive again and looking at acquisitions. We have, over the last 3 years, increased our EBITDA margin to today's 10.5%. And the margin expansion has been driven by organic initiatives, by also portfolio mix, with acquisitions being more focused on leading positions with high margins. And we've also divested some low-margin players. Vestum might be a little bit of the new kid on the block, but our companies have been around for quite some time. The average company in Vestum is 27 years old, so been around for a couple of decades. Now, I mentioned that we've increased our margin over the last 3 years, and one driver has been an increased focus on acquiring leading positions with high margins, and more precisely, companies that provide products. Service companies are great. They're asset light and require not a lot of working capital, and and they're also local champions, meaning that they have strong positions in their respective regions. But our organic growth is much higher selling product because their customers are nationwide. And the water infrastructure market and infrastructure in general looks basically the same across Northern Europe, meaning that we can sell our products cross-border. So we can use other companies' investments, their customer bases, and their distribution channels to bring our companies and our products to other countries. And all of the companies that now represent 44% of our profits, all those products, are market leaders. And they're highly niche, meaning that they have super strong market positions, so they can maintain high prices, leading to high margins. So the average margin for these companies is above 15% on an EBITDA level. So our products is increasing in Vestum from 20% to now 44%. This is per 2023. Looking at Q1, it actually increased a little bit more, so now it's at roughly 47%. Half of this is products exposed to water. So let's talk a little bit more about water. The left-hand side here shows some market data points, and the right-hand side shows some market growth rates. Roughly 70% of the world is covered by water, and access to water is a question of transportation. There's a fixed amount of water in the world. This means that we need to be efficient in pumping water, in supplying water, and ensuring that we have efficient pumping technology solutions. I think this number right here is super interesting. Up to 70% of water being pumped from water source to households or end user is lost. And how is that possible? Well, because the pipework and the piping was built decades ago. So it's extremely underinvested. I think in the UK, in London, some of these pipework were built in wood, which is crazy. And looking at the right-hand side, we supply irrigation systems, and that market is expected to grow by 7.5% over the next 5 years on a global scale. We have public investments going into the water and wastewater systems in Sweden and Norway, which is expected to grow by 6% over the next couple of years. And in the UK, as mentioned, very underinvested. We're looking at record investments going into replacing and repairing pipework and the entire wastewater system over the next couple of years. So this is underinvestment, right? But the other thing that drives this market is climate change and flooding and droughts. And in the Benelux region in 2021, there was a flooding that caused damages of 40 billion euros. That's a big number, 40 billion euros. And with the current pace of investments going into water infrastructure, it'll take us 200 years to replace what we have today. So our purpose here is really to improve water infrastructure. So that's one thing, right? Improving water infrastructure. And how big is this market? It's a global market. This is a global issue. It's not isolated to Sweden or to Northern Europe or to the UK. It's a global market opportunity. And the two main drivers, as mentioned, underinvestment and climate change. In 2023, there was a record amount of floodings in the UK. And now, 2-3 weeks ago, there was a new flooding in the southwestern parts of England. And this leads to water levels being too high, meaning that customers that rent water pumps to move water from one place to another are now using our stuff for a longer period of time because they're afraid what will happen if there's a new flooding. So there's been a shift in customer behavior in the UK market. And we've identified a fragmentation between the large OEMs. We're not going to compete with the large OEMs. We don't do that. The Xylems and the Grundfos of the world. But between the OEMs and the end customers, there's a fragmentation in value-added distributors, in system integrators, in companies supplying control panels, remote telemetry units, and monitoring systems. And this is what we have today and where our focus will remain going forward. All of our companies in this segment is market leaders. They have margins of 20%. The water segment is at 20% EBITDA margin, and with superior returns. And by returns, I'm referring to EBITDA over net working capital. And that number here is 80%, which includes overhead costs. And that is quite outstanding in comparison to to other companies that do what we do. So we think that we have a solid platform that can be both acquisitive, adding acquisitions, but also growing organically. All of our companies in this segment has external CEOs as CEOs, meaning that none of the entrepreneurs are left in the companies. And that's a good thing, because that means that the dependency on key individuals is zero. Now let's have a look at the biggest company in the water segment, also the biggest company in Vestum. This is our biggest company in Vestum, called Pump Supplies. It's a UK market leader in submersible electrical pumps. So pumps this size. You drain them down into water, connect it to electricity, and then pump water from one place to another. This market is driven by floodings, by droughts, by infrastructure investments, by quarries, etc. We have depots across 5 depots across the UK, as you can see on the right-hand side. And the case here is to grow this by adding new depots across the UK, both organically but also with acquisitions. And this is what we're doing now. I was in the UK a couple of weeks ago, going back next week to help this company grow with add-on acquisitions. And as you can see here, phenomenal financial performance. They've grown organically by 20% per year over the last 3 years, while simultaneously increasing their margin to 21%. Phenomenal market position, 1 of 3 players that do what they do in a heavily underinvested market. So leaving the water segment, moving over to some financials. I have 2 slides on financials with me today. One is on cash flow. Over the last couple of quarters, firstly, as you can see here, the blue bars, that's operating cash flow. Vestum defined as EBITDA minus change in net working capital minus capex. Over the last couple of quarters, cash conversion has been over 100% on an LTM basis over the last 12 months. Per Q1 2024, operating cash flow amounted to 869 million. And looking at free cash flow, which is cash flow after everything, after taxes paid, after interest expenses, after leasing amortization, after everything. Cash flow that could be used for fun stuff amounted to 500 million on an LTM basis per Q1 2024, 497 million. And again, that can be used to pay dividends, share buybacks, pay down bank debts, and acquisitions. And as mentioned, we're now ready to make acquisitions again after spending the last 18 months on reducing debt. So, talking about debt, since Q1 2023, we have reduced financial net debt by 20%. The blue bars represents our financial net debt, and the pink line is leverage. We're now at roughly 2 billion in net debt and leverage at 2.5 times EBITDA, as mentioned. Again, acquisitions is something that we're now looking at, and again, especially in the water segment. You can expect our capital allocation to be focused on the water segment in the foreseeable future. So my last and final slide is, how do we take this to become a leader in Europe in infrastructure? I think that for us, it's a key thing to show that we can increase our margin, because that says something about the positioning of our companies and their ability to increase prices. And over the last 3 years, as mentioned, we've seen a margin expansion from 7.6% to 10.8%. And our financial target is 12% EBITDA margin in the midterm. But our ambition doesn't stop there. Our ambition is much higher than 12%. And that is possible if we're successful in working with both organic initiatives and acquisitions. And organically, one thing is companies with strong organic growth, the Pump Supplies of Vestum. We have more companies like that. And as they grow, they also expand their margin with operational leverage. We have companies that can increase their prices. As you saw, 44% today of Vestum's profits comes from companies selling products, and they have very strong positions, meaning that they can increase their prices. They haven't done so over the last decades because they have been entrepreneur-led. It's a little bit scary to increase your prices when you work with your customers for 20 years. And thirdly, we have companies that need to add something to grow faster. They are local, strong players, but we need to add an adjacent city and add an acquisition, what have you. And that takes us to the second bucket, acquisitions. And focus going forward will be even more so on leading positions, leading companies with high margins, even more so than in 2021 and 2022. High margins and very, very strong market positions. So, fast forward a couple of years, we'll have a group with strong positions in growing niches of infrastructure. We'll have best-in-class profitability. We're already at best-in-class profitability in our services segment. Digitalization and sustainability will function as a competitive advantage for us. Today we have two focus groups in our board at Vestum. One is digitalization and the other one is sustainability. And lastly, resilient cash flows. Cash flow is at 100% roughly, right? And ultimately, I'd like cash flow to lead to two things. One, dividends, and one, acquisitions. That's it.
Thank you, Simon, for the presentation. We have some time for some questions as well. So, first of all, when I look at your business, I think you have a very interesting position in civic infrastructure, specifically water. And you talked a lot about the water segment and also mentioned the performance of pump supplies. So my first question is about the growth potential a few years out in pump supplies. You know, how big can it be? You know, in terms of it's already one of the biggest players in the UK. But you know, what is the 5-year growth potential for that business if you also include bolt-ons?
Yeah. So roughly 50% of pump supplies is rental, and 30% is sales, and 20% is services. And when it comes to rental, there's much to be done in opening up new depots, and we can do that both organically or by adding add-on acquisitions, right? And I think that doing it organically will take some more time. There are some small targets that we're now talking to that could add more of the rental side of the business, but also the servicing, which is very, very interesting because you have a new thing coming up now that everyone is talking about in this segment, which is connectivity. You need to add intelligent monitoring systems, meaning that when you install a pump or when you do these pumping services, these pumping solutions, instead of going out on site physically 6 times per year, you can do that twice a year and save resources by having monitoring systems that do that remotely. So that is something that we're now adding more technology into this business. And as mentioned, I was in the UK a couple of weeks ago and now going back. So I think that what you can expect from us is that we will allocate our capital towards pump supplies and towards the UK market to accelerate this growth even further.
Thank you. And you know, UK is a great market for this, but you know, there are more countries in Europe with similar characteristics. So I mean, are there other pump supplies that you think you could potentially look at acquiring over time, and what kind of countries would that be?
Yeah, so as we talked about before, I think the Benelux region and the Italian market are interesting market for us. And why is that? Because the water infrastructure market is heavily underinvested in those markets as well. I think Belgium is the most stressed water market in Europe. So, you know, the next sort of 12 to 24 months, there's still much to be done in our 4 existing markets with Sweden, Norway, Denmark, and the UK. But over time, I think the Benelux region and the Italian market are very, very interesting for us. And there are similar players as pump supplies in those countries.
Yeah, interesting. And what about the Nordic countries? Because your water is mostly based in UK, but what about you have companies in Norway and Denmark, for example. So potential there to make M&As as well, large M&As.
Yeah, so the UK market and pump supplies is roughly 50% of our water segment today. And in the other countries in Scandinavia, we have companies supplying irrigation systems, drilling equipment, and water filtration, but not so much in pumping. So what we're trying to do now is basically to replicate what we do in pump supplies, not so much on the rental side because it's a different dynamic in the Swedish market. We're a little bit better in dealing with rainwater than they are in the UK, which is strange because it rains so much more in the UK. But yeah, so I think you can expect us to increase our sort of pumping presence in the Nordic going forward as well, and to grow our existing platforms because, as mentioned, all of these companies in the segment have solid structural capital. External CEOs, they're pretty strong and pretty big in comparison to other companies invested in size-wise. So we can grow them both by adding competence, know-how, and customers by acquiring similar companies, but also to make organic initiatives. And we're also more focused on clean water in the Nordic region than we are in the UK. In the UK, it's more towards wastewater. So adding wastewater and pumping in the Nordics is something that we're looking at.
All right. And one follow-up on that. Do you think it's possible for pump supplies to expand into the Nordics?
Pump supplies was started with sort of with the rental business model, and that is the core of what they do. And that business model is, I don't think it would function as well in the Nordic market, as it is a little bit different dynamic. So it is difficult to bring pump supplies internationally. We have other products that ship better than these big submersible electric pumps. So I think pump supplies will remain in the UK. But their competence and know-how of doing this for 42 years, that is something that we can use in the Nordic market.
Yeah, got it. And in terms of the EBITDA margin, you target to climb to 12%. So more specifically, what do you think is needed to go there? Is it just, you share that the margins in the product side is 15% or above 15%? I think pump supplies and water is around 20%. So is it just that the product side and the water side is just growing faster and that will take you to the 12%, or do you need something else?
Yeah, I think it's a combination of everything that you mentioned, right? Number one, acquisitions will now be more focused on high margin players. Less than 12% is not something that is very interesting to us. That is one thing. Working with the existing portfolio and increasing prices, that's the second thing. Our products haven't increased their prices as much as they can, so there's much to be done there. And then we have a market, right? An economic cycle. We're exposed to the downturn in the economic cycle. In some sense, we had negative organic growth of 3% in Q1, so not so much, but a little bit, of course. So a better market will help that. But then also, of course, that the high margin players are growing faster. So it's a combination of everything that you mentioned, essentially.
All right, got it. And coming back to the M&A, you talked a lot about it, and you said that you're basically looking for new M&A again, and you think the debt levels have come down to more reasonable levels. So how should we view that the coming 6 months to a few years? Can we expect large acquisitions, or will you just focus near term on smaller bolt-ons?
Yeah, so we have, as you mentioned, focused on the last 18 months on reducing net debt and leverage, and we're not very interested in bringing that up again, since we've done so much hard work over the last year and a half. That being said, we have refinanced our entire capital structure earlier this year, meaning that our efficient interest rate is much lower than it was just 6 months ago. So now it isn't as bad being at maybe 2.7 times now as it were last year. So if we find some really interesting targets, I think we'll go for those now. That being said, we will have leverage top of mind and be very, very disciplined. We're not going to go and chase 5 or 10 acquisitions this year and bring it up to 3 times. But if we do find some interesting targets, that is something that we will look at very, very closely. And I think in the short term, you can expect us to do something in the water segment.
Yeah, interesting. Lastly, one question on the market recovery on the service side. We haven't talked that much about that side of the business, but that has been holding back profitability and growth. And I think, looking at the market, it seems like there's potential that the Swedish building market is bottoming out, at least. What do you see in terms of market recovery here in the second half or early next year?
Yeah, so I think our services segment with exposure to the installation market has faced a tough market over the last 9 months or so, right? We're exposed to end customers being property owners, both in the public sector and private sector. But they've been quite high levered, right? The property owners, and investments have come down, and we've seen this as well. So we've had negative growth since Q2 last year. And I think that now for the first time in maybe 6 months or so, our companies and our companies' customers are talking about some sort of light in the future, right? In the next 6 months or so. Visibility has been quite limited over the last year. But now visibility is starting to open up again, and we know more about the next 6 months than we did 6 months ago. So I'm a little bit more bullish now than I was during the fall. That being said, it's a little bit too early to say when bottom is reached, right? But I'm more positive about the coming 6 months now than I was in the fall.
Great. Thank you. That's all we have time for. Thank you, Simon, and thank you, the audience.
Thank you. Thanks.
Welcome back, everyone, to ABG Investor Days. My name is Henrik Hintze, and I will be your moderator for the next company here with us. This is a company which I cover, namely I-Tech, and here with us today is CFO and acting CEO of the company, Magnus Henell. Please, go ahead.
Thank you very much, Henrik. It's actually very nice to be here. It's the first time I'm with you guys having a presentation. Hopefully it's not the first time I have a presentation at all, but you can judge afterwards. In fact, I actually forgot one title on this. I'm not only acting CEO and CFO, but also Director of Operations, which means I have all the responsibility for our production and supply chain. But, which we're going to talk about a little bit later on. But first of all, let me introduce you to I-Tech. I think that a lot of you know who we are, but I also have some small slides where we talk a little bit more what we do. But I-Tech is a growing, commercialized company. It's been on the market for close to 10 years, products with our substance in it. The company as such was formed in around 2000, which means we are 24 years old this year. We now have our product in more than 20 available products. I will come back to what kind of products we're talking about. We have commercial contracts with 6 of the 9 largest paint manufacturers in the world, and more than 2,500 ships that is painted with our technology. So, and you can have a look on the number to the left. It's a huge number. There is a huge market for and potential for us to grow in, which we should continue to do. So the company I-Tech, we're listed. We are basing it on a unique technology which is protected by certain aspects. We do deliver a proven ingredient biotechnology, i.e. the Selektope product. I'll come back to that. And then we add it to paint. So our customers are the large paint manufacturers in the world. And why do we go up from the bed in the morning? It is, we want to enhance the power of coatings around the world, and we would like to contribute to a lower emissions to air and sea. And how we do that, we will continue later on. But I need to start because we are on a fantastic journey. We recently showed our best quarter ever, both profit-wise and turnover-wise. So we increased the turnover to more than 38 million in the first quarter. We have an EBIT margin of 24%, a little bit lower than last year, but it will hopefully continue to grow over time, and with a net result of almost 9 million. So fantastic numbers in our view. And when we talk about the top line, we also see that there are 3 major customers. We have 1 major customer, more than 80% of our turnover, but then there are also other customers coming up. But a great company doesn't start with just a product. It is the people behind it. And one of the main reasons for actually showing you this picture is to show that this is the entire I-Tech. We are not more than 14 people today that are operative in the company. And all of these have their different skills. We're a very specialized company, but we're also very not, what do we say? The diversity is quite good in the company. We're half men, half women, which we're very proud of because everyone contributes. And we also have multiple nationalities in the company, which brings in different cultures and enhance the corporate culture of I-Tech. So have a look on these people. These are the guys that are going to perform everything going forward. So just very short, what is the products of I-Tech? And we are one product company today. We are investigating possibilities to broaden our offering, but today we are one product company, and we deliver the product Selektope. And Selektope is a molecule that addresses the receptors of the barnacle larvae. And when they address the receptor of the barnacle larvae, it gives them, it forces them to swim. It forces them to use their small legs and swim away from the ship. And this is a non-lethal and temporary effect. So which means that we don't build up any resistance over time. Since it's not killing an organism, we don't build up resistance, which is a very good aspect when we're coming to these kind of products. And so this good product can go in a multiple amount of paints. It is very efficient in low concentrations, where we just put in approximately 2 grams per liter of paint. It enables us to lower all the biocides that we are using, which means that we don't put more molecules into the ocean that we need. And you can develop it together with almost every paint on the market. And for these 24 years, we of course tested and improved it. As I said, it's on more than 2,500 vessels. It's in more than 20 commercial paints. And this is the effect, you can see. Here, other paint, Selektope-based paint. This is a really bad, or in our case, a very good example of how it can be. But of course, if you have like that, you have around 30 to 40% extra fuel consumption. And that is the main reason to bring these products into the paints, to reduce the fuel consumption and reduce the carbon footprint. So, in fact, there are 3 different things that actually drives this development. Of course, the entire marine industry is out to reduce emissions. We have around 800 million tons of carbon dioxide put out from the shipping industry today. 100 million tons of those could be reduced just by having a perfect hull, which means that you slide or you glide through the waters more smoothly. So it's a lot of saving potential, which I come back to later on as well. The second part is, of course, also protect the ecosystems of the world. Now it's been after we solved the problem with the ballast tanks, who shipped a lot of different organisms around the world and released them where they shouldn't be. We have the crabs on the west coast here in Sweden, from far up in Asia, for example. But now they also consider the outside of the hull as a very important vector for actually transporting invasive species around the world. And if you have a hull without any growth on it, then of course you don't transport any invasive species. And the third part is to optimize the material that we're using. For example, we are using a lot of copper today in the paints, which are released into the oceans and stay there. We could use this copper. We can reduce the amount of copper or replace it with Selektope. But by doing that, we also optimize how we use the materials around the world. There are a lot of driving forces behind this, but one major driving force is actually IMO, which is the International Maritime Organization. It's a UN organ that actually sets the rules for shipping around the globe. That's the only global rules that are put into this. And they have set out that by 2050, we should be net zero greenhouse gases, or close to net zero. Today, it's not net zero. It's a lot of greenhouse gases put out. Until 2030, it should be reduced by 40% compared to 2008. And in 2008, we had roughly 1 billion tons of carbon dioxide put out. Now we're down to roughly 800, so we still have quite a long way to go. And to further enhance the development of energy efficiency in the shipping, we have different indexes that are implemented. The carbon intensity index, which is an operational index, measuring how well you operate your ships. You have the EU emission trade system, which will be put in place towards shipping as well, where you actually pay for the carbons you use. And then you have the energy efficiency design index, which is more that how you design. What kind of fuel do you run the company on? What kind of shape do you have on the hull? What kind of paint do you have on it? What kind of auxiliary systems do you put on? Do you put on sails, for example? And I've been in some other discussions, and there is no holy grail to get to this. But everyone needs to work together. Our part might be a small part, but it will also be important in all aspects, because if you go into using alternative fuels, the only thing we know today, if you use renewable fuels to shipping, it's going to be a hell lot more expensive than it is today. And if you then save the fuel you are using, regardless of if it's bunker fuel that we are using today, or if it's methanol, or if it's hydrogen, if you are visionary, the importance of having a clean hull will only grow over time. And these slides show a little bit more, maybe a little bit too detailed, but here is the status that I was talking about, 2008. Here we are today with a carbon footprint, and over there, 2050, we should be down to 0. The great part of this is made possible by slow steaming, which means that you run the ships much slower than you did before, which means that the efficiency goes up. So, but the reason why we show this is that we are in a super cycle on the ships, and both when it comes to new building, because there's a lot of new builds, new ships that are built, that a lot of them are using Selektope-based products. The order books for the shipyards are full for the next 3 years on a new building. We have an older shipping fleet, which means it's going to be a lot of more special service and repairs done, which is also a good timing to introduce Selektope-based paints. And to just, we actually never talked about that too much, but just to give you a very good idea on where is the market in the shipping. And as you see on the right up corner, you see that more than 96% of all the new ship-classed vessels in the world are built in China, Korea, and Japan. Then you have a few also in other parts of Asia and Turkey. But what you actually see is that none of the other areas are important for new building. It is very focused on Asia, which is of course then also where we sell the largest part of our product. We have more than 80% towards that market, because we are today quite heavily skewed towards new building. Then when it comes to maintenance, which is the larger part of our total market, then also the other part of Asia, including Turkey and Middle East, is a little bit more significant, where 2/3 are on the 3 countries I discussed before, and roughly 24% or 23% are done there. So, how do we perform? I was talking before, we have 6 of the 9 largest paint manufacturers. They stand for roughly 90 to 95% of all the anti-fouling paints, which is our potential market, that are produced in the world. It's a lot, great deal of the market that they are going for. We recently announced that PPG, which is the Pittsburgh Paint Group, just launched a new product, a new global product, both for new building and dry docking, which have a good potential. They are one of the large ones. We also consider that we were maybe a little bit over-optimistic on the next customer that we believe is going to launch a product, customer G. But on the other hand, we shifted, and we believe now 10 to 18 months instead of 6 to 12 months. But there also been one of the other ones that have recently come up as a new potential product. And within not so long time period, we will have 8 of the 9 largest paint manufacturers with products on the market. So we have captured the paint producers. Now we should continue to work with this to make sure that they actually propose our products or the products where we are included. And to give you a little bit view on how our customers work, Chugoku Marine Paint, which is our largest customer, they're roughly 80% of our total turnover. This is from their stand in the Japan fair, which recently held. And as you can see on the right-hand side, Selektope is everywhere in their commercial. They are really focused on pushing out products with Selektope, which is also why they gain market shares and they also increase their volumes. Oh, time flies. Just to give you a little bit flavor on what's happening on the financial side as well. We are, as I said, our best quarter ever. We have a nice growth path. We have a good operating result. We are turning the percentage of our operating cost downwards. We have, due to some extra cost that we need to take now, increased it a little bit. I'll come back to that later on. But as you see on this slide, all the numbers point in the right direction. We have 24% growth in the turnover. It's the highest turnover ever. We have 9% growth in the EBITDA. Then I come to the other external cost, which is roughly 1.5 million more than that we should have had. And that is because, I don't know if you're into it, but we are in a process with EU about the renewal of our approval there, which have some hurdles. I'll come back to that later on as well. And most important, see our biggest customer, they grow with 30% compared to last year. And we have customers launching new products. So this is a slide we never showed before this quarter. I just want to show it because we're quite proud, actually, to say that we have a very stable balance sheet compared to a lot of companies on the market today. Almost 100 million in cash. Then, of course, you as an investor would say, why don't you use this cash? And we'll come back to that. But we also have some deferred tax assets, which are, of course, declining and should decline until we actually start to pay tax. So then some of the cash will actually go to tax in not too long future. But on the other hand, we have today a very good cash conversion. We only have 7% of working capital, which is also very proud to be, that we have set up a business model that don't take so much cash in place. We're debt-free. So what we're going to do is we are going to increase the working capital a little bit now when we introduce new producers. We are going to pay dividends, actually tomorrow, I think. We'll pay 150 to each share. And we are also looking into new plans. What can we do more? Are there any other products that are similar to our product that we can maybe invest in or acquire, etc. So we will make sure that we put the money in use. Unless we don't do that, we will continue also on the dividend stream and maybe extra dividends if we consider that we don't need cash in the company. Just very short, a little bit on focus, because we are continuously working on our producers. We have soon 3 different producers in India in place with different setups, but they are very efficient, they are good quality, and all of them are sort of also producing towards the medicine industry, which means it's a quality stamp on them. And why do we have 3? Well, of course, we're going to secure the supplier redundancy. And we would like to work with everyone to increase the process yield. We're always going to work with that, because you can always be better. But then, of course, we want to secure the most efficient production setup. And one part of that is actually have different producers competing with each other to make sure that we don't have a monopoly on our production and they increase the prices. Perfect. So, outlook. As I said before, we're going towards commercial relationship with 8 of the largest paint manufacturers in the world. We have operational improvements, which then by end of this year and coming periods should be shown also on the gross margin. We have technical milestones, which our R&D department, which is a very important department of I-Tech, are conducting that will help us to drive volumes in dry dockings. And as I said, if you compare the potential, I would say that the ratio between dry docking and new building is 10 to 1. If we have a potential of 1 in the new building, then we have the 10-folded volume potential in the dry docking. maybe it's bad to sort of conclude with the challenges, but we are in a process with the EU, as I said. There will be some meetings coming now, the coming time, but it's a very long process. And regardless of what kind of recommendation they come with, if they are recommending still that we should be regarded as endocrine disruptive or not, it will take a lot of time. And we are still very hopeful that we will come out on the positive side on this. But we shouldn't forget where the market is. More than 80% today is in 3 different countries in Asia. More than 90% of our total market is in Asia. And we are increasing the cost a little bit due to the strategic search, develops in manufacturing, etc. So the last part is nothing we can do about. We are in significant delays towards US and EPA, mainly the leisure boat market, which is not the largest one, but also towards the 9th paint manufacturer on the screen over here, which are very focused on US. Thank you very much, Henrik, and all of you here, and all of you out there.
And thank you. Let's move on to some questions. So, first of all, you painted a nice picture of the market. It's a big market, and essentially all ships today use some kind of anti-fouling, right? So, yep. So what I'm wondering is if you could expand a bit on why start using Selektope instead of the copper-based paints that are the most popular today, and if there are any other alternatives that are your competitors in the market, or why you are so sure that you will continue to take share here.
Yeah, I can answer that. And we should remember that it's a very conservative market, the shipping industry. So even if you can prove that you are better or cheaper or regardless, it's hard to change. We should have that in consideration. It took some time to get Chugoku on the boat. It took some time to take the other customers on the boat and the shippers, of course. But the reason for changing, I would say, is that actually the end paint is better when you formulate it together with Selektope, either together with copper and maybe a little bit less copper, or totally copper-free. The product will be more efficient towards barnacles. That is the main reason. And of course, we have time to prove that. But we have, as you saw on the screen earlier, we have quite a lot of proof. The comparison was a premium paint with copper in it, with all the barnacles. So over time, we will prove that we are more efficient.
All right. So with this product then, you talked about the different customers on the market. It's a very consolidated market with 9 big paint manufacturers, basically. So you sell Selektope to them, and then they sell paint to shipbuilders, basically. So could you just paint us a picture of how your relationship looks with the paint manufacturers and the shipbuilders, and what the hurdles are to growing faster here?
Yep. First of all, when I-Tech started to be commercialized actually when our previous CEO, Philip, started in 2012, and we should start the commercialization of I-Tech, we needed to create a pull effect from the shippers. So then there was a lot of focus on marketing towards the end market, so to create a pull effect on the paint manufacturers, to make sure that they put a paint product on the market. Today, we have a very good relationship still with the shippers, but on the other hand, we have so many customers out there with products on the market. So our main relationship is with the paint companies and working together with their head office and their R&D department to actually make sure that, well, our ambition is, of course, that every new paint should be included with Selektope in it. And a large part of the new paints that come out is Selektope based. So that is our main focus. And talking about hurdles, I would say still conservatism in the market. But once in, it's I wouldn't say it's hard, because if you fail, you will be thrown out. But as long as you continue to prove your product, you will still be in the market. So the main hurdle is to get in, get the recurring payments, etc.
All right, and finally, on the financial side of things, in the past years, you've grown your revenues faster than costs by quite a bit, and I'm just wondering if you could comment on how we should view this going forward. What are your needs to invest to grow further, and how will that affect your margins?
Yeah, our ambition is to continue that path. Of course, it could go on for eternity, actually, but on a lower level. But that is the ambition. Then, of course, we come to, from time to time, you need to stepwise increase your cost. When we discussed earlier, I had an example that the persons handling the order can only handle as many orders. If you double them, of course, you will need some more personnel. But in fact, we have a quite good base now to significantly increase the revenues. But on the other hand, we also have taken strategic decisions to actually strengthen the organization within the business development side to make sure that we continue to push out the Selektope in as many formulations as possible, but also look into other areas where we can do difference.
All right. Thank you very much for that. That's all we have time for today.
Thank you.
Yeah, I mean, go ahead.
Thank you. Just if you can elaborate a little bit on IMO, are there the targets they have? Are they binding? I mean, we have a ghost fleet flying around the world with 1,500 ships. Are they covered with any of these products?
I don't know, I would say, because we don't know which specific ships that are covered with our products. But of course, IMO is as binding as you ever can get in the shipping industry. And when they set the standard, then all need to abide to it, the global shipping industry. So, but we should also remember its targets. It's not a legal rule, so to speak, that you should be net zero. It's targets, but it also drives the entire business because the entire marine industry is working towards getting as close to net zero as they can. They are looking into new technologies. They are looking into the premium anti-foulings. They are looking into, well, as I said, sails on ships to reduce fuel, etc. So the marine market is committed to continue the path downwards in the carbon footprint. Thank you very much.
Hi everyone, welcome back to ABG's Investor Days. My name is Carl Bokvist. I'm an equity analyst at ABG, responsible for covering, among other names, Green Landscaping, which is the company we will listen to now. With us today, we have Head of Investor Relations, Magnus Larsson. We will keep our usual format with a presentation by Magnus at first, and then we will follow up by some Q&A afterwards. Magnus, thank you for coming, and please, the floor is yours.
Thank you, Carl, and greetings to you all, and welcome to the highlight of this conference. So, my name is Magnus Larsson. I am heading the IR practice at Green Landscaping Group since about a year and a half. And prior to that, I've got most of my career in the general engineering industry, focusing on managerial roles in finance, supply chain, and investor relations. With that said, over to the juicy stuff then, which is what we are, right? We are a home for entrepreneurs, meaning that we are a serial acquirer, and proudly so. We are not sector agnostic, meaning that we focus on a specific industry. And in our case, it's ground maintenance, green space management, and landscaping, to be more exact. In other words, it's sort of managing outdoor areas in cities, urban areas in cities. It's what we do. And we are a home for entrepreneurs, meaning that we consist of 50 companies and just a very small head office on top of that. Looking at our numbers a little bit quickly, we can see that we are a growing company. We have 6 billion in sales, almost 5.8 last year. We have grown heavily. Organically, it's 5%. In total, it's 35%, which indicates that we are an acquisitive company, obviously. The 5% organic growth is smack where we want to be. Not too much and not too little. The EBITDA margin is 8.8. The capital structure is exactly where our target says it should be. And we've got a solid order book as well. Looking at the graph a little bit, yeah, the performance has been really strong for quite some time. You see the blue lines over there, those are our target levels, and they seem to be very modest, but actually, looking at the sales, which is at your top right, it's a 10% annual sales target, which is pretty steep for most companies. We were averaging a CAGR of 35%, you saw from the last slide. But here you see that, yeah, we've been growing a lot, and successfully so. Looking at the bottom right, you see the EBITDA margin development. We have a target of 8%, which was a stretch target at the time when it was set back in 2018. Now we're surpassing it every quarter on a rolling 12-month basis. So yeah, we are doing really well. So what, and why is this? Well, that's part of what I'm going to talk to you about. Our story either begins in sort of 2010 or back in 1952, if you wish. Our oldest company was founded there. It's Taimisto Huhtokoski, a plant nursery in the midst of Finland. But about in 2010, the Green Landscaping Group as a company was sort of saw the dawn of light. We applied a centralized business model at the time. We grew relatively successfully from a sales perspective, and definitely ineffectively and a big failure from a profit perspective. So we tried hard for a number of years with the centralized model and failed, really. So in 2015, that was sort of shifted and put on its head. We made some really heavy lifting in the years to come, moving from a centralized to a decentralized model. And you looked at the numbers and how it developed since. So yeah, this really is the way to go in our industry in particular. Looking at our case, we are active in a very attractive market. We have the right business model for that market, and we have a proven M&A strategy. So those would be three sort of go-to points that I would like to leave you with. And why the proven M&A strategy? Well, being a serial acquirer, M&A is sort of at the center of what we do. So that is why that point is so valid for us as a company. Looking at the market then, why is it really attractive? Well, it has good and steady growth. I'll show you that on the next slide. It's got very low cyclical characteristics. We have predictable long-term maintenance contracts. It is large. It is highly fragmented, so it looks a bit strange compared to other industries. It is exposed to favorable megatrends, and we have some notable barriers of entry as well. So let's double-click on some of those. This is an example from Sweden and from the main customer group, the Swedish municipalities. You see to your left that over the past 10 or so years, the growth has been at a CAGR of 4.1. Remember that we had a CAGR of 5% organically from one of the first slides, and this is 4. So it's right where the market is, or just slightly above. During this time, the world hasn't really been sort of sleeping or sleepwalking. It's been exceptional occurrences and macro events. You wouldn't really think so looking at this. The market has grown with those 4% up and down just a little bit over the years. So it is exceptionally steady with a good growth as well. Looking at the right-hand side, we see that the customers, the municipalities, again, total spend, that's the pillars, and the line at the very bottom is what they spend on our addressable market, meaning it's a really low share. So it is really steady, it's a really low share as well, which is why in the unlikely event that the customers would run into some sort of trouble, this is not really where you save your money. There we go. It is a very large and highly fragmented market. It is where we are active right now, 500 billion Swedish, consisting of tens and thousands of companies. Think about the market. Okay, it's managing outdoor areas, green space management in cities. Of course, we've got cities all over, which is why the market is so big, obviously. I'll go in a little bit in detail into why this is so fragmented as well. The customer base, this is our customer base, but it's pretty typical for how it looks for most companies. About 30% would be private companies, and 70% would be public companies, meaning municipalities, regions, the church, if you wish. And there you go. Now, notable entry barriers in this market, and they look not really the way that you usually see entry barriers. We mow lawns, we trim trees, cut branches, we do these things. We make it nice and tidy in spaces, in open spaces. That is not rocket science, you might argue. I will not argue with you. So the services performed are simple, meaning there is no sort of technological or R&D or anything like that entry barrier into this. There is no economies of scale that you need either to be in here. Really, if you look at the picture, that sort of resembles our market. If you picture yourself your average city, this happens to be Stockholm, but it could be any city. You scale the largest building in the city, usually a church tower, and you look around. There's your market. Anything that is beyond your sight is beyond your reach and beyond your market. You are there. It's exceptionally local. The equipment that you use, the services you perform, they are competitive within that site. It's too bulky, but also too cheap to actually move around a lot. The customers that you serve are the ones that own the land that is outdoor. Mostly public customers, as you saw. Those are public customers in that city, nowhere else really. Meaning that if you know your local market in a good way, you know the twists and turns, you know the streets, you know the customers, what they want, you know the corners where the snow usually piles up, or the leaves usually fall and the wind blows to, you have a significant advantage compared with anything else. There is no way you can have a centrally located, ever so clever department that calculates how this should be done. You need that local knowledge, which means that those tens and thousands of companies, yeah, those are the very local ones, and I'll show you in a bit how they could look as well. So if you know your stuff, you're good at what you do, you are able to perform here, and you have those long-lasting relations with the customers as well. And there's your real entry barrier. On top of that, you've got the other stuff that is written on the wall here. So yeah, that's about the market. Well, given this sort of church tower analogy that I just painted to you, you see why the decentralized business model makes much more sense than the centralized one. You cannot, well, you can if you put heaps of money into moving into a city with a global brand name. You can convince perhaps some customers over a number of years that you could do and perform these services. And after a number of years of probably loss-making, you have won this small city and you have no benefit when going to the next. So you cannot sweep the market with a blistering performance or something like that. And you're up against a local family company that knows the twists and turns and actually makes the money as well. So you have the seemingly contradictive pattern of having a very big market, yet exceptionally local as well. So it's just geared towards local small companies. Now, and that's what we sort of retain as well. We have an evergreen horizon, meaning that as a serial acquirer, we buy to hold, and it's a home for entrepreneurs. It's not a way station, it's not a pit stop. It's something that we always buy with the intention to keep, never to sell. Learning from one another, building something great together, a fantastic journey, yeah, those are key words as well. And also in italic at the very bottom, decent people making decent returns in a decent way. That's sort of buzzwords that sort of guide our behavior as well. Those are the traits that we look for in new companies as well. That's what we believe that we are, and that's what we believe that makes a journey fantastic as well. Now over to this, it says M&A track record, 43 companies since 17 with sales of 4.6 billion. Yeah, that's all good. And you see it over the years as well. But really what I want to show with this is all the different logos. The green landscaping group logo is not present here because that's really, well, it's targeted towards the financial market, you guys, and also potential acquisition targets. But that's pretty much it. We are not operational. The operational parts are here. That's the brand name that you have. It is exceptionally strong. For instance, if you take Hadeland Maskindrift, there has a great brand name in that part of Norway, completely unknown probably to you guys and to everyone else outside of their small market. And that's sort of the beauty of it. So they are there. They grow with what? Yeah, they grow with those 4 or 5%. They just grow with the market. And the market is growing well because of those mega trends as well. So they're healthy there. And we'd like them to stay on that track. And then we add on the sales with adding new Hadelands, which we are. And towards the right of this picture, you can see the latest additions, and they look suspiciously German, which is correct. That's where we are focusing mostly now. Yeah, the proven M&A strategy. Well, I think the figures speak for themselves. Those are the best proof points. But what is it that we do then? Well, we have a focused and disciplined approach. We have an experienced management team, an experienced M&A team as well. And we are really particular in retaining the leadership, the brand, and the operating model. So in the selection process, we say no 9 times out of 10 at least, because we're very particular and meticulous in what companies we want to bring on. Also because if we bring on something that doesn't work, we don't really have the means to turn it around. We're not geared for that. We don't have that central cost applied. We can do a little bit. And we can send in one of our teams that we have. But that's pretty much it. And that would be an exception and a mistake from our side if that happens. So this M&A process, for it to be successful, it needs to be focused and disciplined. And we need the M&A team to be experienced as well. Yeah, we take in newcomers, but we put the experienced guys in between, and they are the decision makers. Yeah. Selection criteria, I think I'll skip that and move on to a slightly odd slide. It may be tricky for you to see it over there. Those are our 2 latest additions in Germany, the press releases that we sent out when we acquired them. The first to the right is Lässle Landschaftsbau und Tiefbau, suspiciously German. Yes, it is. What I want to highlight here in the red is that the CEO of the company and the owner, Mr. Rainer Lässle, no coincidence that the company bears his own name. That's pretty typical for our industry. Says that, well, my aim is to safeguard Lässle Landschaftsbau und Tiefbau for the future and retain the current workforce. That may just pass by when you read about it, but just take notice of it and move on to the right-hand side. There we had the acquisition of Gartner Kuschler GmbH, Kuschler, with Mr. Wolfgang Kuschler being the owner. Again, the brand name sort of similar to, or same as the family name. And what he says is, now I need to see here, with this step, we ensure that Gartner Kuschler is prepared for the future and remains a reliable partner for our customers, employees, and suppliers. Yeah, that may sound obvious, but really, this evergreen horizon that we provide, the home for entrepreneurs instead of a pit stop or something else, is really sitting well with most entrepreneurs, with the ones in the DACH region in particular. So important that we actually put it in the statement in the press release here. So for this is an edge that we have compared with our competitors, meaning other ones that might be able to buy companies in this industry. There are not a lot of them, I could tell you, but the ones that are don't look like us. They may, most of them are PE-backed. But this, to ensure that the company bearing your own name is kept in a safe harbor for the long haul. Yeah, that's really important to them. We're aiming to build a European champion. Yeah, we're present in Sweden, Finland, Lithuania, and Germany since last year. We have announced the acquisition in Switzerland. Process is pending, and we have our main focus set on the DACH region, meaning Germany, Austria, Switzerland. And with that.
Thank you, Magnus. So the first question is, well, since you and I have had the opportunity to speak quite a lot recently about your journey, can you just briefly describe this combination that you have achieved lately with finding, you said, companies growing with the market, but you have found companies with very high profitability, with margins above your group targets. And in addition to this, you have also, in a tough market and with inflation and everything, you've been improving the businesses in the existing operations. So can you just maybe, if possible, briefly discuss, what you do after a business is acquired to make sure that they continue to perform well, or if a company is struggling a bit, what you do to make sure that it returns on the right track?
About the improvement of the existing businesses, the heritage that we had in the Swedish companies back from the centralized part of the journey, they weren't performing very well. So there we have put in a lot of work, and there you have had all of the turnaround. So we know how to do that, and we also know that, we make better value actually buying really good companies to begin with. We've tried the one thing, and we're able to turn things around, but it costs too much. It's not where we should put our main efforts. But if need be, we intervene. So that's one. But what happens when we buy a company? Well, to begin with, there are tens and thousands of companies. Many struggle, many don't, and a few ones excel. And those are the ones that we'd like to pick out. That's why we are, that's why we are so picky. Does it work?
Yes.
Yeah. That's why we're so picky. And when we acquire, and already in the process, we sit down and say that, all right, we acquire you because you are good, not to make you good. So we like what you see. We want you to retain your brand name. We want you to retain you as an owner and your staff as well. Now, we know this industry inside out as well, and there are some commonalities that we know should be there in order for the company to be great. And we'd like to sit down in the next 90 days with you and go through this playbook. I'm sure there are some things that you can pick up there, and then we make a plan for the coming years on the journey, both in succession perspective, but obviously strategically as well. And this is the central part as well. We're buying a good company. He runs his business according to his own mind. If he wants to take the advice, he's free to do it. If he wants to reject it, he's free to do that as well. That's sort of part of the decentralized model.
And then my final one is a two-parter. The first one is, in terms of acquisitions, should we expect that most of the upcoming ones will be in Germany, or do you see opportunities in the Nordics as well? So we'll take that one first.
It's yes on both. Most will be in the DACH region, probably heavy on Germany, but we don't rule out acquisitions elsewhere.
And the second one with your 10% growth target, and recently you've improved your cash flow generation, and your debt levels have come down. So, and you've established a footprint in Germany. So it seems at least that this growth target will continue to be at least a minimum level, maybe?
Yes. I mean, the targets, I think I mentioned that. They came about in another time when the company looked differently as well. They are more subject to questions as to why they are so low, and if we expect to go down to the target instead of reaching them, which is sort of the opposite world compared with how many companies face. We acknowledge this, and we're working on the targets. yeah, so I'll leave it there.
Good. Thank you, Magnus. Thank you, everyone who have been listening. And with that, that concludes this presentation.
Thank you.
Hi, and welcome back to ABG's Investor Days. My name is Lara Matadi, and I work as an equity research analyst here at ABG. With me today, I have Jonas Tunestål, CEO of Scandi Standard, who will be giving a short presentation of the company, followed by a shorter Q&A. Please go ahead, Jonas.
Thank you very much. I'm glad to be here to present Scandi Standard, and also a couple of our quarter one numbers and figures. So I will start directly. Scandi Standard, we are a pure chicken player. We have 13 billion in net sales, and we serve about 1 billion meals a year. And we are approximately 3,200 employees, and we are present in 5 countries, in the Nordic and in Ireland. And there are strong consumer preference for local produce, so therefore we have local footprint in each of our country. But we work as one team together, as we call. We have these 5 P&Ls and 1 Scandi Standard, and that is to be able to be local and present in the local market, but at the same time use the effects of being a group. In quarter one, we have some significant volume and profit growth. We see strong demand at slightly lower prices, but our prices are directly linked to our input costs. That is an important thing to understand when you look at our numbers. Our top line is linked to the feed cost in the chicken production. So you have seen in this quarter, you have seen strong growth in volume, you have seen strong growth in margins, and you have seen strong growth in our EBIT. But our top line is slightly declining due to that link. And that link is about 80% of our businesses have this link to the feed price. We have this EBIT of 122 million, that is 30% increase compared to last year, and it is in our ready-to-cook business that we see our strongest improvement. In our ready-to-eat business, for the ones of you that have followed us, we have this temporary lower capacity utilization due to we lost that big contract, but we are regaining and recovering volumes, but I will get back to that later. We see we have a strong balance sheet and put ourselves in a position where we're strengthened that the latest years to be able to take next step in Scandi Standard. And our dividend is 2.30 SEK, and we have already paid the first half a couple of days ago. Scandi Standard has made this successful turnaround process. When you look at more long-term in Scandi Standard, you see this high organic growth from 2016 and stable margins, about 4%. But then in 2020, in the first half, came this COVID-19 disruptions and also an unsuccessful differentiation strategy in Denmark that cost Scandi Standard a lot. As you can see, that dip in margin happened during that time. But since then, we have had a successful turnaround process, and we took down the volume, set up the prices, and made a new strategy in Denmark, and has come back since then and recovered our margins back to historical levels. And when you look at fixed EBIT, we are in this quarter actually the strongest EBIT in Scandi Standard's history. And now with this strong demand, we've allowed ourselves to put up the volume back again. And the reason why we see this strong even demand in chicken is this because it is an affordable product. Even in the high-end cuts in chicken, they are competitive to the low-end cuts in other proteins. And that means 2 things. It is about the competitiveness in chicken, but it also allows us in the long term to actually be able to increase the margins over time. And here you can see where we are present and our market position in the different countries. We are number 1 in 3 countries, and we're actually number 1, number 2 in Denmark. We are 2 equal players there, and then we are have a more challenger position in Finland, where we are number 3. And as I said before, we have this local footprint in every country, and the country on the customer base. And in our competitors, we are highly consolidated, so there are only a few players. And there are also high entry barriers to be able to enter the market in terms of the high preference for local produce, and you need a lot of capex to be able to set up a slaughterhouse, and you also have a long lead time to invest in farming and so on to get your local position in a country. So in some sort of way, it's a little bit semi-closed on this because of this large hurdle for new entrants. We are also expecting strong growth for the future. We have seen historically 44% poultry growth since 2010, and we're expecting a 13% growth from now on until 2030. And as you can see, we are the only protein that are growing over time. And that even if you compare in 2023 and go look into plant-based, or if you look into the other red meats like pork and beef, chicken is the only one that is growing. And we think that these are the growth drivers for that, because we have the responsible, safe and nutritious part of chicken seen as a healthy protein, but it's also convenient and versatile. And what do we mean with that? We do not have any religious barriers. We also see that in the convenience business, we see a strong growth in chicken when it comes to salads, when you see chicken kebab or nuggets or burgers and so on. So it's, you can use it in many different occasions. And then you have the affordability, and we call it affordable because it's sustainable, and that is due to the high efficiency there are in a chicken. It's actually, when you look at the CO2 emissions and the feed conversion, it's beneath both all the other meats, and it's beneath salmon as well. And if we can make a good progress in the feed when it comes to soy and so on, I think that we can be down at a level at some plant-based products as well. And here's a reconciliation of our segments. And as you can see, we have this strong growth in ready-to-cook in the quarter. We're a little bit more challenged in ready-to-eat than others, but that's short-term challenge, and I will get back to that. And if we go a stick deeper in the ready-to-cook business, we see, even though I explained the link to feed prices and the lowering of input cost, we have a 3% increase in net sales, and we have an 8% increase in volume, and we are moving from 31 million in EBIT last year into 96 million now. We see that this is a continuous strong improvement in earnings, and we see that that will continue in terms of the demand is rather high for the future. But with that said, when we're looking into our EBIT per kilo, because that is a thing that we want to measure how much profitability we can take out of every kilo that we produce. We have recovered, and due to last first quarter, we are now at 137 compared to 0.47 last year. We still have a gap to close, as you can see in the top right corner. And when we're looking at our total profitability in Scandi Standard and our financial targets that we have set up, we are aiming for 3 kronor per kilo in Scandi Standard in total. So we have a way to go, and we have a firm plan to reach that. We also see that the export prices remain at high level, and that is due to lower supply in Europe, and we will see supply constraints in Europe in total, and that will keep the export prices on a high level in the nearest future as well. And then when we come to ready-to-eat, there we have this net sales drop and our EBIT drop from 45 million last year to 25 million, and that is due to the loss of that contract, a big contract that we have had, and now we are recovering the volume and getting them back, and actually we're replacing the volumes with a more diversified portfolio with higher margins on each contract. But it will take a little time to get that back, and at that time, On that journey, we have, of course, a higher cost price, and that has cost on the EBIT level. And here you can see the net sales in ready-to-eat over time, and at the top right corner, you can see we were in 2023 down to 600, and compared to last year, and in this quarter we're down to 594. It ended out at the lowest volume in Q4, and that was also what we communicated, and then we will take step by step for each quarter. So the quarter one were higher than quarter four, and we're aiming to continue that process and have further, that is our biggest ready-to-eat plant, filled up, because we see a strong growth over time. It's uneven, and you can see that in historical numbers as well, but it's a strong growth, and that is due to the strong convenience trend, and that is And here you can see our net sales over time in ready-to-eat. And as you can see, we had this top in 2019, and then a short dip, and then we climbed again. And when we look into our cash flow guidance, we are expecting to invest 500 million in CapEx this year. And that is an expansion of our ready-to-eat plant in Norway, where we have capacity constraints and actually are sold out at the moment. And we are putting up that plant during this summer, and hopefully it can give in production in quarter four. We're also investing a lot in deboning capacity on legs. We see that a massive trend all around Europe to consume more deboned thighs and legs. You have had that in Sweden for a while. We're also increasing our product differentiation in Ireland, and we are investing in a new ERP system. That's a project that we have been working on for years, and the first go live were in Sweden, now in Kronfågel, a couple of weeks ago, and then we are rolling it out in Norway and Denmark and the rest of the countries during the years. And it's super important for us to ensure the animal welfare. That's a cornerstone for us in Scandi Standard, and to be able to be a leading player. We are well ahead of this in the Nordic, but for that we are on forefront, we can be even better. So this is a cornerstone in responsible animal welfare and safety for consumers and employees, and the nutritious part in chicken as well. And we are measuring it in a structured way. So we have this ESG ratings, as you can see on the right side, and I think that we are on number 10 out of 360 worldwide in packaged foods. And when you look at on the top on the CDP, I think that A-, when you look at in Sweden, I think that we're only two companies in the food industry that have been able to receive A- in the CDP rating, in the ESG ratings. So we are moving really, really much up this area, and this is a big focus from us. And this is the strategy, our simple four pillars that we need to be excel on to actually be able to increase our margins and increase our profitability and be a future-proof Scandi Standard. It's about increase the value of our protein, ramp up the efficiency, have sustainability as an integrated part in our total business, and working as better together. And this is the one Scandi Standard that I'm talking about. That we can be these 5 P&Ls with responsibility, but we're working and excel as one team. And the most valuable part in terms of EBIT, it is about increased value of our protein. And this is the special thing with our business. It is that we buy in a whole piece and put that into pieces. Most other businesses buy components and build a product. And when you have this type of reversed value chain, you need to optimize everything because it's given what you get. And then you need to optimize it in the best way, both on a sustainability means and on a profitability means. And that's why we have put up this financial targets, and they are really important for us, that it's both targets on sustainability and it's targets, financial targets. And we are expecting a 5 to 7% organic net sales growth. As I explained in the beginning, it will go a little bit like this due to the price of the input costs, but organic growth of this time will be 5 to 7%. We will try to achieve an EBIT that is above 6% and a ROCE that is above 15%. Then we'll reduce our CO2 emissions with 50% and have this low antibiotic use that is unique for the Nordic, that is beneath 1%, and lost time injuries beneath 15, and this employee satisfaction above 75. That is also something that we measure. And then we have this target that we're also talking about, this achieving this 3 SEK per kilo. And that is our most important internal target, because that measures how much value we can get out of every kilo that we produce. And we are in Q1 2024 at 1.74, and we're going to we are aiming for achieve above 3 kronor per kilo. And then maybe the question is, okay, where have you found this 3 SEK per kilo? Is it realistic? It's absolutely realistic. We know that the good ones in Europe are well above 3 SEK per kilos. And we have, with this unique position, and if we're able to optimize Scandi in a really good way, we can achieve that target and go beyond that. Oh, sorry. But we need to invest, so we have this investment, 2 billion investment program, where we earmarked part of that as sustainability, to meet our sustainability target. But that's the same thing. That's the same thing as efficiency. It's about using fewer resources. So to summarize this presentation, we see in Q1 significant profit and margin expansion. We see an encouraging demand. We are expecting continued profitability in our ready-to-cook. We have a strong focus and a disciplined replacement in ready-to-eat. And we have a clear strategy to reach our long-term goals. So we have building blocks to actually be able to get beyond 6% margin and beyond those 3 SEK per kilo. And we see a large potential of climbing the value ladder. We are calling it internally the chicken ladder, where we actually try to focus and take out most value of everything. It's not only about the breast fillet or the legs or the wings. It's also about how you can take most profitability out of the feathers or the manure or the intestines, and how you can move things up the value ladder and take out most value out of it. Because 50% of the volume on a chicken is things that are not main cuts. So that is super important for us, and that's why we have put out this, as we call, the ingredients business. So that's the final words in the presentation.
Thank you, Jonas, for a great presentation. Maybe we could start off with a couple of high-level questions regarding the attractiveness of chicken as a protein.
Yeah.
Could you, as you mentioned, chicken is growing, but could you elaborate a bit on how the relative attractiveness of chicken has changed versus other proteins, and which key consumer trends are driving this?
Yeah. Yeah, a little bit like I said in one slide. I think that there are a long-term trend, actually, and that is a movement from pork into chicken, and that has been going for a really long time. And the reason why, there's those several reasons. It is because it's affordable. We need to remind us on that. It is an affordable product because it is sustainable. So it's high efficient protein. Everyone can eat it. There are no religious barriers or so on. So you can serve it everywhere. It is also a protein that is versatile in that meaning that you can use it in many different species. So when you look at ready-to-eat or convenient food, you can see it in salads, you can see it in sandwiches, you can see it in nuggets or burgers, or you can see it in the frozen segments in chicken kebab and so on. So it's a really broad spectrum in convenience, and that is one of the main reasons for the growth in chicken.
Yeah, thank you. And if we turn to the development in your key segments, I'd first like to ask some questions on your ready-to-cook segment. You know that 2023 was a year of recovery for ready-to-cook, and in Denmark, now that you've reached break-even results, could you share some thoughts on what we should expect in the near term and in continued improvements in the near term?
Yeah, and if we take ready-to-cook in general, we see this, as we say, continuous growth. When it comes to Denmark in specific, there were this drastic strategic movement that was really costly for Scandi Standard that was made a couple of years ago. Now when we have reversed that and balanced that in a good way, we have got back to break even in Denmark. We have this aim in total in Scandi Standard of an EBIT margin of 6%. I think that Denmark will be able to support that. It will not be the highest margin in our group, but I really see good traction in Denmark, and I really see that we are able to move that significantly over time. So we have a positive outlook for ready-to-cook in total and Denmark moving up.
Yeah, and in Sweden, which has historically been your biggest market in this segment, volumes have reduced. Can you share some thoughts on when you expect Sweden to return to volume growth?
Yeah, actually we are at that stage. We took down the volume to secure the price level, and that is the good thing with chicken compared to other proteins. We have this short production cycle, so we can scale down when we see that we need to put prices through when there are high input costs as the feed prices. So we took the volumes down and actually set the prices up because we knew that there are continuous growth in the poultry segment. And now we see that we're slowly picking the volumes up in total and also so in Sweden. But we have capacity left, so we have room for growth in the coming future.
Okay, and with that, I would like to thank you so much, James, for your time.
Thank you.
Hello, everyone, and welcome back to ABG Investor Days. My name is Adrian Gilani, and I'm an equity analyst here at ABG, and I will be moderating the upcoming presentation. With us today, we have Sonny Mirborn, CEO at Alcadon. He will hold a roughly 20-minute presentation, and then after that, we should have time for some Q&A to wrap things up. So with that being said, Sonny, please go ahead.
Thank you, Adrian. As mentioned, my name is Sonny Mirborn. I've been with this company now for about 5 years. It's been an immensely interesting journey where I think we have created a fantastic company. Let's take 20 minutes to describe what we actually do and how we have performed the last few years. But first, what we actually do. We use a lot of data in the world today. Data is as important as, you could say, water, sewage, electricity. But in order to use that data, we have to facilitate the actual transfer of data. And for that to actually happen, you need material for that to be able to transfer the data. You need fiber optic cables, you need duct systems, you need pop stations, you need street cabinets. In our business area, outdoor connectivity, this is where we facilitate the transfer of data between cities, between areas, between buildings. To a large extent, this is enabling fiber to the home or 5G, for example. A large part of this business area is actual fiber optic cables and duct systems, and pop stations, street cabinets, and the likes. And we offer complete systems for this to happen. The other business area is indoor connectivity. This is where we started in 1988. This facilitates and enables the transfer of data within any type of premises. And basically, over 80% of the bandwidth that we use today is indoors. So this is really important. And this is what enables connectivity in a premises just like this, or a hospital, or a military facility, for example. Again, complete systems, cabinets, fiber optic cables, copper cables, outlets, plugs, sockets, complete systems that we offer. Today, the broadband segment alone is about 25% of our turnover. Data centers that forms a part of indoor connectivity is about 25%, and the rest is a mix of services, trainings, residential networks, industry solutions, structured cabling for connectivity indoors. So it's a mix of different end customers and end segments. But this is basically what we offer, and we offer solutions, complete systems, but we are talking about passive material, not active components in general. To give you a brief overview of where we stand today, 5 years ago we were present in Sweden and Norway. By doing some rather large and a couple of smaller acquisitions, we have ventured outside of Sweden and Norway and outside of the Nordics. So today our biggest markets in the UK, and the Benelux region is also growing to become very, very important for the group. This has changed the organic growth profile of the company. A lot of the large data centers being built today is happening in this area around London, Frankfurt, Amsterdam, Paris, and we are present in a lot of these data centers being built. And when we talk about the broadband markets, you can say that the UK, Belgium, and Germany are among the world's most interesting markets when it comes to the fiber optic rollouts. But I'm going to speak a little bit more about that later. In essence, we are a distributor. That means that we represent global manufacturers on our local markets. And we have over 200 suppliers today in the group. Just in fiber optic cables alone, we have 8 suppliers that we work very closely with in different markets. This is an extremely flexible approach. It makes sure that we do not miss a technology trend, but we combine it with our own brands and production, where we can facilitate customer-specific solutions for our customers. Today, we have over 4,000 customers. No single customer constitutes more than 2% or 2.5% of our turnover today. So we have a large group of customers, and I'd say that the average customers with Alcadon is a small to mid-sized installer, basically, across our countries and markets. Could also be operators, could be data centers, could be industrial companies. So it's a large variety of companies that forms our customer structure. Our NPS score of 57 is quite high. we have extremely loyal customers. A lot of them, a vast majority, has purchased our solutions on a regular basis for a minimum of 10 years. So we have very loyal customers, which we are very happy about. The same with our employees. About 15% of the company is owned by us working for the company, which we are very satisfied about. I think it's the best incentive you can get, that people from all levels of the company own shares. And when we acquire companies, we make them reinvest in Alcadon shares, and that's a really strong strategy on our side. They form usually part of the management or prolonged management team and take an active part in developing the group further. To speak a little bit about the markets that we are present in, and let's start with data centers and indoor connectivity. When we use more and more data, and the amount of data in society today is increasing with 35 to 50% every year. With the introduction of artificial intelligence, this is not going to slow down in any way. It's going to increase even further. With increasing amounts of data, we need storage capacity, and that is basically a data center. That's why you have seen companies present in this field deliver magnificent reports the last year, because of the introduction of AI and more data centers being built. We are focused mostly on the enterprise and co-location data centers, especially the small ones. So if Lloyd's or JP Morgan or Nordea are building a data center, for example, in the basement of their own building, we might take part in that construction process. Usually we are not present in the really large hyperscales. But after a recent acquisition in Ireland, we might take a larger part of the process of these larger data centers as well. There are several reasons why data storage is going to increase. But I'm going to move directly to where that's going to have an effect on us. And basically, you say that in the UK and in the Nordics alone, data center investments are expected to increase with about 10 to 25% a year for the next few years. We have seen several sources that says the same. When we started really focusing on this in 2020, we grew with about 40% the first year from low levels. The year after, we grew with 35%, and we still see a very strong growth rate in the data center field. When it comes to structured cabling, which enables connectivity in any type of premises, which is basically products that you need in an office space like this for connectivity to work, there you can say that even if you look 20 years back or expected growth rate 10 years going forward, it's about 5 to 7% a year. So it's not these fantastic growth rates, but it's a very stable base to stand on for us. Broadband or outdoor connectivity. This is an important area for us. It's 25% of our turnover. And this area has been severely hit by increasing interest rates the last year. A lot of the rollout that we have seen in countries like the UK or in Denmark or in Germany has halted significantly. And you see some of our peers in the market that are even more focused on FTTH have really experienced this. But there is an inherent need for fiber optic cables. So it's only a matter of time before the rollout will start again. And we are a rather small player in several countries, so we have not experienced the same drop as many other players have. In Belgium, for example, we had a growth the last quarter of over 200%. So if you are a small player, you can still grow quite rapidly. But as you see, in terms of broadband subscriptions, the maturity is vastly different in different countries. And among the fastest growing and most interesting countries globally today, you have UK, Germany, and Belgium. And we are present in all these countries. And we are considered one of the leading players in terms of product assortment, in terms of solution portfolio in this field. So incredibly important markets. And there are several reasons why this growth should continue. We have a sustainability trend in switching copper for fiber, which is very important, of course. The 5G deployment that we have, I would say that we have hardly seen it yet. We have seen it a little bit in Sweden, a little bit in Denmark, to some extent in Germany, but Belgium is a country now where we really see it, and that's supporting our growth. They are beginning from a really low level when it comes to FTTH or fiber to the home broadband. But they are starting their 5G deployment at the same time. And 5G requires 2 to 16 times more fiber than FTTH. So it's an incredible amount of fiber that we see are being rolled out in Belgium right now. And of course, over the long term, you have construction activity, population growth, data growth, technological development. All of this supports new fiber being rolled out or additional fiber being rolled out over time. In Sweden, for example, do you know anyone who doesn't have a broadband connection? Hardly anyone knows that. Still, over 30% of the investments needed to reach the government targets by 2025 remains. 25% by now. Sorry about that. But for us, FTTH is extremely important in Sweden alone, and it's new projects coming all the time, because some of the fiber we rolled out 20 years ago needs to be replaced, or you need to roll out additional fiber. So it's a very interesting market for us. I want to dig a little bit deeper into our latest acquisition. This is a typical acquisition that I think that we will be doing going forward. We have about 1.6 billion SEK in turnover, and this is a company with slightly above 10 million euros in net sales. Very profitable, high margins, a very, very strong cash flow. Their EBITDA over net working capital is over 100%. Small company, focused team of, I think there are 17 people, really focused on the data center and the indoor connectivity segment, and they've done a fantastic job over the last 15 years. It's a company that we know extremely well. They have been working for 12 years with our British company. That's how we got in contact with them. So this is what we like. We know the company. We've been trading with them for a long time. We've got personal connections. We share suppliers. We see non-invasive synergies. When you put a lot of companies together that are in the same vertical or the same field, you don't need cost synergies, because they are going to create a lot of value just by being together and being able to talk about new products, new solutions, shared customers, and the likes. We acquired it at a reasonable multiple. So we acquired 100% of the company. It had a positive EPS and cash EPS effect from the onset. We did quite a detailed memo about this and sent to the market. The earnout, extremely well balanced. I can hardly see any scenario where this will not be a cash flow positive acquisition. So we tied basically the earnout to not only EBITDA growth, but also cash flow and margins, to be able to make sure that we can draw up several scenarios where we will still have a positive cash flow from this company. The value add, primarily, I would say, being in Ireland, this is where the decisions on which material to be used for the large data centers across Europe. Large American companies come to Ireland to choose an installer and choose material. The installer follows the construction of the data centers to Sweden, Finland, Frankfurt. That's where the choices are being made, and we have the products for it. Would have the products for it, but we can strengthen them considerably. And they wanted an outlet to reach the European market. So for us, it's a perfect strategic acquisition. But on a pure financial viewpoint, it's a very strong acquisition for us and our shareholders, we believe. Seen over a longer period of time, one of our main targets is to grow 20% a year. So far, supported by both organic growth and acquired, we've grown 32% a year. We're quite satisfied about that. One target that we have not reached is our EBITDA profitability of over 10%. I think we ended up on 5.4% in Q1. Now, important here to understand is that the majority of our markets are already on, above, or slightly below our EBITDA target. But we have a couple of markets where we are growing rapidly, and we have to invest in OpEx, which affects the markets. And we are growing very rapidly in these markets, above 100%. I think in Germany we grew with over 40% in the quarter. In the Benelux area we grew with over 200%. So you got a large share of turnover affecting the whole group with a lower operating margin. So that affects us, of course. And the higher interest rates have affected our sales in mature markets like Norway and Denmark, particularly, I would say, Denmark, where we lost a lot of turnover. But it's not lost forever. The FTTH or broadband rollout will continue again. It's hard to say when, but in most markets, we have had a very positive view from our customers when it comes to Q2 and going forward this year. So we think that it's only a matter of time. And meanwhile, waiting for the broadband segment, we still have the data center segment growing very, very rapidly. So we're happy about that. In terms of leverage, after we've done the Network Center acquisition in the UK, which is now 40% or over 40% of our turnover, a huge acquisition for us, we were quite leveraged. We were shortly almost at 4, I think, in net debt EBITDA, which is quite a lot. But we were never scared about this because we had a plan and we have followed that plan. Now it's, I think, excluding IFRS 16 or the leasing, it's 1.9. So I'd say we have a very strong balance sheet. And the last 18 months in total, we've had a very strong cash flow. So I urge you, take a look at our report, follow the free cash flow per share, for example, and you see a huge impact that we have had during 2023, for example. I think we increased cash flow per share, operating cash flow per share by almost 300%. So it's a huge impact. During the last 2 years, a lot of companies in our business had problems with inflation. We have problems with the supply chain disruptions. Inflation is generally not a problem for us. Short term, yes, 1 month, 2 months, but we can pass on price increases. And we have shown historically that within a quarter, we have been able to maintain our margins. We are very satisfied about that. Supply chain disruptions, on the other hand, very difficult. We had to build an inventory. In some aspects, some of our suppliers came to us and said, you know what, we have 9 months lead time. How do you respond to that when you're growing 200% in some markets? And some markets are stable at 0% growth. You never know what you're going to do. We build an inventory, and that helped us maintain our market shares. Now we don't need such high levels of inventory anymore, so we are reducing our inventory levels. And that's basically why our cash flow has been extremely strong for the last year or so. That's basically what I had, Adrian. Yeah, you probably have a few questions. I saw one slide was missing about the Q1 report, but
that's no problem. We can take some more general questions than the Q1 report. I'd like to dig into the acquisition model a bit. You mentioned some of the strategic things you look at when making acquisitions, and you talked briefly about synergies. Could you perhaps expand on that? What concretely are you talking about, and can you give some examples of synergies?
You could say that we're looking at non-invasive synergies, basically not cost synergies when we acquire a company in a new country. But since we acquire companies within exactly the same field, we share suppliers. Sometimes we are missing a supplier in some country. For example, we had it's called blowing machines that are blowing a fiber optic cable. They didn't have that in the UK. They couldn't find a proper one. So we had a Swedish manufacturer that we launched all over the group. We had French Legrand, huge company within the data center segment. We won a very nice prestige project with them in central London. And they were so satisfied that they said, can't we do this across the whole group? And we said, yeah, in all countries except Norway, it's very suitable for us because we already have a similar supplier there. So we launched this product portfolio all over the group, and we already get some very interesting projects because of that. So we are helping each other on that side, and also on our own brands. I mean, it's our own brands. It's copper and fiber optic cables. Sometimes we can use the same suppliers, and we can drive costs down and increase profitability. We can share inventory. You got a lot of these type of synergies that we see in our acquisitions.
And in terms of the product categories you're looking at, a few years ago, people weren't really talking about data centers. The focus was perhaps more about fiber to the home. Now that market is in a slump at the moment, and data centers is doing better. Would you say that the focus has shifted, or are you equally focusing equally on both those areas as well, still?
I'd say when the broadband segment or FTTH segment was going like this, a lot of investors criticized us and said, why don't you do a large-scale acquisition in the US with the biodynamics, with the large fiber optic rollout occurring there? You should do that. And we said that we want to maintain a balance. Data centers, structured cabling for commercial properties, and broadband. So we choose the best companies that we find, and hopefully they are present in all 3 fields, or at least 2 of them, because then we can add something. But we have focused on data center segment when nobody else did, which has given us an extreme head start in our business. But also the broadband segment. I mean, don't count it out. I'm sure the growth will be fantastic. And as we see in Belgium, we see it in Germany, huge volumes being rolled out over, we're talking about 10 to 15, sometimes 20-year projects. So it's a very nice portfolio of projects we have there.
And even if you now didn't go into the US, you have still made a geographic journey as well, going from a mainly Swedish and Norwegian company to now a pan-European company, you could say. When you look at the geographic split today, are you sort of happy with where that's at now, or are there markets you would like to add to that as well?
We have a few other geographic markets that we're looking at. It's not a must for us. We have plenty of nice acquisitions to do in our existing markets, where we can perhaps sometimes also find cost synergies. But for us, it's more about finding the proper companies. The US, we have looked at it. We have found a few interesting companies, but I'd say it's easier for us to expand to Austria, Finland, Spain, France, northern Italy. We have a few areas where we are still in a blind spot. And not to say, just in the UK alone, we could probably find 10, 15 nice acquisitions if we just started looking more deeply. But we do 1 to 2 acquisitions a year at a maximum, so we don't need more than that.
I understand. And perhaps digging a bit into your profitability target, you were quite open with saying that's the target that so far has not been reached. It sounds on you like scale is going to be one important aspect of reaching that. Is that going to be the main driver, or are there other levers here to sort of inch up the margins over time?
You can say this is the targets over a business cycle, and during our capital markets day in September 2022, I believe it was, we launched this target, and we said that we don't expect to reach an EBITDA over 10% before 2025. I think it's still doable that we can do it by 2025, but it's scale-driven, and it's mostly the Belgian and the German market that needs more scale, because we are ramping up OpEx there. And we're reaching a limit now where we can continue to grow with the same organization, but you need a minimum amount of people and a cost structure that would support growth, for sure.
And if we focus perhaps on the current year, with the different product verticals that you have, what's the best outlook you can give if you were to give your best estimate on how should we think about the fiber market for this year? Should we see a recovery? Will the strength in data centers continue throughout the year?
Yeah, I would say that for sure the data center segment will continue to grow. I think the commercial property segment will continue to have a stable growth. Not in the high range of 10 to 20% for sure. When it comes to the broadband segment, I think that we will see basically all of our markets coming back to growth during this year, but it's very difficult to say when. We've had positive signals from Germany, from the UK, and these are the 2 most important markets for us. So if that happens, and we do expect it to happen, we're going to see a very positive impact for sure.
And when growth has slowed in some of the areas you're active in, you, as you mentioned, have instead been able to increase efficiency and get out more cash flow instead. Is that sort of, have we seen the impact of that efficiency, those efficiency improvements, or is there more ground to gain on things like working capital management? And
what we said during last year was that when growth has started to slow down in several markets, we are going to be more efficient in our net working capital management. And we see that the supply chain disruptions they're presently not there anymore. On the contrary, we have a lot of manufacturers with excess capacity. So I'd say that we will be able to continue to increase our net working capital efficiency, but we are slowly reaching the limit now. So perhaps 1 or 2 quarters more, we will see a more efficient handling of that. But besides that, I cannot promise anymore. We had a huge boost in our cash flow the last 12 months.
Yeah, I understand that was quite exceptional.
Yeah.
One final question from my end. You've fairly recently announced that you will be leaving the company as of October. Can you just talk us a bit through that decision, and if or if not that will have any operational or strategic impacts on Alcadon in a more long-term sense?
Yeah, sure. I think that during these, 5 years is a long time when you have this position. That is one thing that one has to remember. But we built a fantastic company. I've got plenty of shares in the company now as well. I intend to keep those. You could say that we now have structural capital in the company. So it's substantially more stable than it was 5 years ago. We have a very strong management team. I'd say, and being very open with that, the only thing that could be paused a little bit are new acquisitions. because I'm certainly not going to do a large-scale acquisitions a few months before I leave the company. That has to be left for the next person who takes over. But we have planned for this the last 3.5 years from the board's perspective and from the management team's perspective. And we are very, very decentralized. So each market, each company have their own strategy, their own management team. The only thing handled by 2 people in group headquarters, myself and our CFO, is basically acquisitions. And then it's more capital allocation issues. So I'd say that with the right person coming on board, and I trust that we will find someone who's very suitable, I think the company can develop and continue this journey for sure.
Perfect. And I think that's a great point to wrap it up on. With that being said, I'd like to thank everyone for listening in, and thank you to Sonny as well.
Thank you.
Hi, then we welcome StrongPoint with the CEO, Jacob Dwarabak. My name is Frederick and I will moderate the call. For those new to StrongPoint, it's a grocery retail technology company that improves store operation and shopping experiences. It holds a wide product range, including shelf labels, self-checkout solution, grocery lockers, in-store and dark store pricing solution, and cash management solutions, and much more. In addition, it is an outstore partner, and by that, I give the word over to Jacob.
Thank you so much, Frederick. Happy to be here and to allow me for the opportunity to present StrongPoint better. If you can go to the next page, then maybe I'll just jump straight at it, because StrongPoint's purpose is to infuse retail technology in every shopping experience for a smarter and better life. And the reason why we said that is twofold. One is to improve the operations of the grocery retail, improving the efficiency in particular, allowing the retailer to boost their margins, or alternatively, lower prices, which is very popular in today's macroeconomic climate, to attract consumers. And exactly the other part, of course, is then impacting the end consumers, both improving the shopping experience, but also making that making the shopping experience come at a lower cost if and when grocery retailers decide to let off some of the efficiency savings go to end consumers. On the next page, just to give any new listener a very short glimpse of what StrongPoint is. We are we have our headquarters in Norway, but we're traditionally a Nordic-based company. We have grown now into 9 countries. That is Norway, Sweden, Finland recently also, the 3 Baltic states, UK, Ireland, and Spain. And in these 9 countries, we offer not just the sale of solutions, but the sale, installation, service, and support of solutions, which is vital to both get the necessary performance of the solutions we offer, but also to reap the benefits short term, but also long term, thereby building a close relationship with the grocery retail. We had last year about 1.3 billion Norwegian kroner revenue, and I believe today the SEK-NOK conversion is about 1.0, so that makes it easy. You would see that 80% of the revenue that we have stems from grocery retailers. And we serve all the grocery retailers, and I mean all, in Norway, in Sweden, in the Baltic countries, and in Finland, with one exception, that being Kesko. But so we serve all the grocery retailers, and we're starting to penetrate the UK and Spanish market, and we'll talk a lot more about that later today. We have about 500 employees and have been listed on the stock exchange for 20 years, although our history goes even further back. So we're not a new kid on the block in that respect. Can they go to the next page, please? I will, well, Fredrik, you did a great list of some of the solutions that we offer, but instead of going into detail right now on all the solutions we offer, I'm assuming that most listeners are Swedish. And if you ever shopped online in Sweden, our solution would have been in use, whether that's the fulfillment of orders or the order picking solution, picking the orders or the groceries for the order in store or in dark store, or whether that's going to an Inga store and picking it up from a grocery locker just outside the store. Similarly, if you go to the grocery store, we are predominantly having own solutions, but we also have a couple of partnerships, of which Pricer, the Swedish company, is known to be one of them. We're offering the Pricer electronic shelf labels in stores. You would have seen them in most stores in Sweden. We also offer our cash management solution, and you would have seen our solution if you were to buy any kind of tobacco or pharmacy products in using the VenSafe solution instead of a manned solution. I think that's the best way in just 1 minute to explain what our StrongPoint really offers today to grocery retailers and how you as end consumers are being impacted. Surely there's a long list, and you will see that we also have a portfolio which is tailored also for the future, of which we're very proud of the AutoStar partnership, as you mentioned, Fred. If you go to the next page, then we are really focused on grocery retailers. I said about 80% of the revenue we have stems from grocery retail. And that is deliberate, not just because the solutions are very specific for grocery retail, but also because it's a resilient market. In today's environment, it's important for us to underline that we're not just targeting retail in large. You've seen a number of retailers, non-discretionary spend retailers, having a bit of a struggle. But grocery retailers have and are relatively stable. Sure, low margins, but big volumes, making sure these are very, very solid customers and as such good payers. We barely have any sort of losses on any outstanding payments. So very resilient market. The second thing is that if you contrast with other retail, the grocery retailers are having the by far biggest spend. We recognize some 3/4 of the total retail spend in the tech spend in the retail space to be attributed to grocery retailers. And then lastly, we're seeing that the increasing penetration of technology in grocery stores or grocery operations is almost inevitable. We're seeing that with, electronic shelf labels has been and is an important part in the Nordic countries. Now we're seeing that coming out in the rest of Europe and the world. We have self-checkout solutions, of which StrongPoint is very proud. Again, for the Swedish listener, those are not our solutions you see in the supermarket, but I can assure you that our self-checkout do not stand behind anything, and with our newly integrated artificial intelligence to item detect what's on the scale, it's also a very, very effective theft prevention for retailers. But in general, technology is growing in importance for grocery retailers. So with this, everything should be very clear, no clouds and tailwind and what have you. Unfortunately, that's not always the case. And so if you go to the next page, you'll see that in our short-term results that we've delivered over the past few quarters, we've had a bit of a challenge. The revenue has actually come down, and we've experienced a profitability squeeze, which has led to 2 consecutive quarters now with negative EBITDA. And a negative quarter has never happened in my time at StrongPoint, which is now 6 years. There are principally 2 reasons why we've seen this happen. One is that in Norway and Sweden, which constitute a little bit less than 50% of our revenue, we've seen a investment halt or a postponement of investments. To some extent, you can understand that because over the past 2 or so years, both the Norwegian kroner and the Swedish kroner have been depreciating versus USD and Euro. And so what that means is that when we have been importing solutions like the self-checkout solution, like the electronic shelf labels, like any kind of solution which involves hardware, that has all of a sudden become just a lot more expensive because of the depreciation. When you combine that with cost inflation and a general consciousness in the society, and in particular with grocers, of keeping cost control, that has prohibited us from increasing the sales in these markets. Short term, we hope. The second thing that's happened is that we did in 2022 a acquisition into the UK and Irish market. We believe that's a very successful acquisition, and we experienced some fantastic growth with that acquisition in the UK market following COVID. But that said, we did also realize that the old management wasn't fit for purpose when we were growing the solutions that we had to offer on top of what the business that we had in the UK was offering. And that has also impacted us. So over the past 6 months, we've taken two very concrete actions. One being a cost reduction of 45 million, which we are well into doing. So that's a 45 million per annum cost reduction effort. And there's also a reorganization of teams, a reorganization of teams to create both more commercial power, but also to share more best practices across countries where that makes sense. We go to the next page. And this is important and happening sort of under the surface of something which is, as we just saw on the previous page, doesn't look great. Actually, we've had two of I would call it the most significant events in the history of StrongPoint. First is the Sainsbury win. To put this in perspective, Sainsbury's is the second largest grocery chain in the UK. They are some 4 times bigger than Norgesgruppen. Again, for Swedish listeners, ICA is about 150 billion. If you exclude the pharmacy and Rimi, then ICA stores is 100 billion SEK. So we're essentially looking at a company that is 4 times bigger in terms of revenue. And we are now delivering the order picking solution for Sainsbury's. We're in the process of doing that. And that's a big thing. The UK market is the by far highest penetrated e-grocery market in Europe. Sainsbury alone has 14%, so 14% of its total turnover through e-commerce. And all the food, all the groceries that's going through there is going to be handled with StrongPoint's order picking solution. So that the exact same solution that Axfood and Coop and others have been using is the same solution we'll be now applying with Sainsbury's. That's number one. That's a big thing for us. The second thing is the win of Mercadona, or notably that the installation of a new, and we would call revolutionary, cash management solution to Mercadona. Mercadona might not be that well known to Scandinavian consumers or investors, so let me help you out. In addition to being about the same size as Sainsbury's, this is by far the biggest grocer in Spain. 26% market share, and the second on the list is Carrefour with 9%. So this is the by far biggest, and it's also one of the, if not the fastest growing grocery retail chain in Spain, and now also Portugal, with more than 1,600 stores. A soft discounter with what we as Scandinavians, certainly Norwegians, would label as high-end, fantastic offering, in particular on the fresh products. These two we now landed in Q1 and Q2, and we are in the process of delivering on these massive wins. So despite all the sort of fuss and importance, of course, about the short-term profitability, these massive wins have taken place just in the last 5 months. So if we go to the next page, I mean, the importance of these two projects are first and foremost important because they're just big in size in and of itself. But secondly, when we've taken the top 10 grocery customers that we've been serving over many, many years now in Norway, in Sweden, and in the Baltics, we typically see that our customers are not just buying one solution. They're actually buying on average 4.7 solutions. And this makes sense from two angles at least. One is that, by starting to serve a customer, we're gaining the trust with that customer. It's a lot easier to buy from someone that you already know, has delivered quality, and that you know by person. And by the way, you're also in the purchasing departments, the databases. The second is that we're able to offer solutions that would increase the value of the solution you already acquired. So let me give you an example. In the case of buying or purchasing our order picking solution, by having, say, electronic shelf labels and applying the pick by light functionality you could use using the flash on the electronic shelf label, you're increasing the speed of the picking. So you're essentially creating an ecosystem where 1 + 1 does not just make 2, but more than that. Same goes with lockers. And so the list goes on. And if you click one more, that's of course the inspiration or aspiration for these two major customers, Sainsbury's and McDonald's. Notably, you'll see here we have two on Sainsbury's already, where we have been serving Sainsbury's for many years through the UK entity that we acquired. And I believe actually that important reason why StrongPoint won with its order picking solution is also because they have familiarity with StrongPoint ALS, the UK entity, in supplying shop fitting services and engineering services. So this is the second sort of value pillar of these two major customers. It's actually growing the number of solutions with them. If we then go on to the next page, and we start taking a bit of a view of what are then opportunities in key markets. Certainly in our traditional StrongPoint markets, we have close to 100% penetration. As I said, it's really just Casper we are not serving. So the growth, the white space, if you want, is not from adding one more grocer. It's more about increasing the penetration of solutions. And again, even though we tend to sort of think that, well, we are so mature already in these markets, there is still ample opportunities. Although you will see to use the Swedish grocery retail market again, although you will see our e-commerce solutions many places, there's still ample opportunities for a lot more grocery lockers, as an example. Electronic shelf labels, it's far from penetrated, even in Sweden. The penetration in Norway is a lot higher than in Sweden. Why is it not coming more in Sweden? And we believe that it is happening absolutely the same. And to finish up Sweden in that respect of opportunities, the self-checkout solutions, which are growing in popularity, we have developed our own hardware and software with a very, very sophisticated artificial intelligence, which is being utilized to avoid theft prevention in our self-checkout. I mean, we strongly believe this will be making its way into the traditional StrongPoint markets, Norway, Sweden, when the next cycle of investment is happening. But of course, the really big growth areas for us are Spain and UK and Ireland, on also the back of Sainsbury's and McDonald's. So I said, number one, the project in themselves with Sainsbury's and McDonald's are big. Number two, we absolutely hope to be growing to 4.7 number of solutions and beyond with both those grocery retailers. But thirdly, there's also a big white space in terms of grocery retail chains that we still haven't properly touched. Of course, when you win with the number one and number two in its respective markets. That's also catching attention, raising eyebrows. And so we're just seeing that the level of seriousness, the level of responsiveness to any kind of outreach with these two clients in our pockets is better than ever before. And we also believe we have absolutely the right solutions for these markets. Otherwise, we wouldn't be there. So to round things off and give you some questions, time for questions, Fredrik, maybe if you go to the next page. In short, why invest in StrongPoint? Well, first of all, it's grocery retail, not retail. That's a resilient business, absolutely, and we believe that will remain a resilient business. Number two, we have a great deal of growth opportunities in existing markets, also in the traditional StrongPoint markets, but surely and to an even bigger extent in the very large UK and Spanish markets. And lastly, not investing in new technologies is not really a option. So one thing is buying the solutions today, but the solutions for tomorrow that we also represent will absolutely be something that grocery retailers and our customers will be asking for in the future. Thank you.
Thank you so much for your presentation. Time is running out, but I think we have time for at least one question. And you spoke about customers like pushing out their investment decision given the macro uncertainty. And how do you see the second half of 2024, the macro conditions?
Yeah, I mean, like there are indications that the market is improving. I mean, certainly inflation is starting to come down. It's yet to be seen how the NOK and SEK will react.
Yeah.
But there's these are typically postponements. So it's like with I'll give you an example, a concrete example. It's like with electronic shelf labels. Once you've invested in electronic shelf labels, you're very, very unlikely to go back to paper tags. Right? Yeah. And in Norway, right, we had just prior to some 6 months ago, we had a very large order of electronic shelf labels for an existing customer. Of course, not going back to paper tags. So I think a lot of the investments that have been pushed on them, they kind of inevitably need to happen, in particular when they've been hardware driven. And if they're not hardware driven, it's typically on a SaaS model, which is more recurring of nature. And we have actually about a quarter of our revenue being recurring from licenses or software services. So yeah, I mean, like we expect and believe that there are indications that could signal that the latter half of this year will be better than the last 6 months, I believe.
Yeah, thank you. It seems like we don't have time for any more questions, but thank you so much for your presentation.
Thank you, Fredrik. Thank you all.
Ja, tack ska ni ha. Då
Welcome back to ABG Investor Days. My name is Simon Jönsson, equity analyst here at ABG. Next, we have the honor to present John Westberg, CEO and co-founder of Clavister. And with that said, I leave the floor to you, John, and I will come back for a Q&A session at the end.
Thank you very much, Simon. Today, when people talk about cyber, quite many talk about cyber risks or cyber threats. To us at Clavister, talking about risks or threats, that for us sounds to something you will find in a typical Baker McKenzie report. Like, it's quite theoretical, quite analytic. We, on the other hand, would like to talk about a cyber war, because that's exactly what it is. It is a war, and it has started. It hasn't started recently, it started way back. If we move back to, let's say, 2014, when Russia invaded Crimea, already back then, the world started to see an escalation of cyber attacks, but not towards the sort of classical enterprise businesses or the governments only, but to critical infrastructure, to transportation, to areas which essentially was crucial for Ukraine to function. And of course, this is just escalating. What we hear and what we see in the news, the attacks on Coop, the attacks on Detta, etc., those are just the tip of the iceberg. The real threats, the real attacks are well hidden, and you unfortunately won't see them too much exposed in media. Our role in this is a very bold statement. We think that we are on a mission to cyber protect Europe. Europe is obviously, you know, a vast market, so more specifically, who are we targeting? Well, we like to talk about customers with mission-critical applications. That meaning customers that have quite a big asset to protect. They have a function in society where a successful cyber attack has quite dire consequences. If we look at, you know, the typical matrix of industries, of course, any industry is subject to a cyber attack, be that the, you know, textile company or the school, or my favorite example, the local optician, where a cyber attack can have a devastating effect even for the small business, but the consequences stop there. A couple of customers, the local, you know, the small companies, B&L, that's the effect, no more, no less. If you look at the upper right corner, you see industries where the effects of a cyber attack are much, much more dire. If a large Swedish state-owned agency, Försäkringskassan, as one example, would be subject to a cyber attack, you would have millions of Swedish citizens not being able to do their, you know, daily work with technical problems. So this is better. Obviously, millions of Swedish people not being able to carry out their applications for sick leave or parental leave or what it might be. If you look at the defense sector, highly relevant in these days, a successful cyber attack is literally able to kill people. That's where you have the toughest consequences and the highest ability and willingness to pay for cybersecurity. So what you see in that blue ring over there is Clavister's focus areas since some years back. One of the reasons why we decided to focus strongly on those areas is our technology origin. So we take great pride in that all our technology is researched, developed, implemented, designed, and built in Sweden. Now, why is this important? Well, of course, because of the Swedish engineering tradition, you see typically people associate Swedish technology, Swedish engineering with quality, reliability, innovation, and so forth. That's all good. but it's also another geopolitical aspect to it. If you look at an investment from a public sector agency or a defense company or any other mission-critical type of customer, if you are to choose between a European technology or a US technology, Israeli technology, Chinese technology, or even worse, Russian technology, it's quite clear that in order to protect Europe, you need European technology. This was more anecdotic a few years back, but in all the recent procurements, all the recent RFPs, RFQs we are involved in, the question on technology origin is real. European customers prefer European technology, and Clavister is one of the few European companies. So we take a lot of positioning and a lot of pride, of course, in that everything is developed in Sweden. If we look at one aspect of it, reliability as one practical example, our products typically have a lifespan of 10 plus years. We have examples of customers who are running our products non-stop for over 10 years. This might not be that relevant for the local optician, but for a infantry fighting vehicle running in Donbass, it's quite convenient that the product is still running when you need it. Speaking about geography, this is how we're located today. Again, the vast majority of our team is in Sweden. Headquarters is in Örnsköldsvik. We have a site here in Stockholm and a smaller site in Gothenburg as well. And some sales structure as well in Western Europe. What's more important, however, is the reach that we have from our partner network or through our partner network. So in most part of Europe, all the dark blue parts, we have a partner network with over 500 reseller partners today. So literally almost anywhere in Europe, if you want a Clavister product or solution, there is a reseller or partner there to help you. And they are highly qualified, they are trained with certifications and so forth. Some examples of customers or industries that we are helping. Of all those industries you saw in that the blue circle, we have picked 4 to focus even more. Public administration, public agencies, regions, municipalities, and so on, quite obvious. Critical infrastructures, we mainly mean energy and utility companies, energy grids, energy providers, utility companies, water treatment plants, and so forth. Defense, which I will come back to, and telecom. All industries and customers that are highly relevant for a functioning society. And again, a cyber attack towards one of these has severe consequences. Some examples of what we're doing. One case study is with Germany's second largest energy provider, RWE. They had a challenge a few years back where they had acquired many green energy power plants throughout the entire Germany and parts of other parts of Europe as well. Now, they needed a way of connecting all these power plants, be it solar plants or windmills and so forth, and doing that in a controlled manner, secure manner, reliable manner, plus the benefit of having European technology. So after a procurement process, they decided for Clavister. And in each and every power plant across Germany, Clavister products are installed, communicating back to the operating center in Düsseldorf. With this structure in place, they are effectively monitoring and running all the power plants 24/7 without local staff on site. Very effective solution, obviously. What happens then in defense? Well, defense, again, it's probably the customer group that has the toughest consequences. If you have a successful cyber attack, you are literally putting your team at risk, a lethal risk. We're seeing here that, of course, to no surprise, all the military platforms are becoming more and more digitalized. That goes for more or less any type of platform, be it on land, in sea, in air, and so on. Another important aspect of defense, when you define and design and build a defense platform, for instance, the Swedish CV90 or the German-produced tanks, those systems take typically several years to design, several years to get approved, and then they're supposed to run for 30 years, 50 years maybe even. The problem is that the enemy doesn't need that long. They need a couple of hours or 1 hour to design a new cyber attack. So the odds are really not in favor to the classical industry. Plus the enemy is, much different. State-sponsored Russian assets, Chinese assets, and so forth. So quite a tricky adversary to fight. Then on top of this, of course, we have AI. Everyone is talking about AI, but practically it is really reshaping how defense needs to work with cyber. Modern attackers, they are using AI as a tool to craft attacks that are custom made to hit a certain type of platform. Could be a submarine, could be a tank, could be something that is highly valued. And as a countermeasure, companies like Clavister and other cyber companies need to adopt AI to counter those threats. So it's the ever ongoing fight between the bad and the good here. And as a conclusion, obviously, a cyber attack can immobilize any weapon system. And this is quite a harsh statement, but it is the truth. And again, a CV90 in Donbass being halted because of a cyber attack, well, then you have the Russians there. So it is a great threat. And this leads us then to our next case study as an example with BAE Systems, where their challenge was, as a producer of the Swedish CV90 Stridsfordon 90, this is a highly digitalized platform already. We're looking at a vehicle with more than 30 computers, almost 200 sensors, each of them susceptible to a cyber attack. So knowing that, realizing that the future of the battlefield is not only the physical battlefield, it is the digital battlefield as well. So with dialogues going on for quite many years, BAE Systems decided to work with Clavister to resolve those challenges, to have security solution in the vehicles that could combat cyber attacks, also being NATO compliant, looking ahead, realizing that the CV90 is becoming and has already become a great export success to other NATO countries. So any security solution needs to be NATO compliant. In the end, what the solution resulted in, without going into too much details, but on the right-hand side, you see sort of the typical electronic infrastructure of a CV90. It could be your Volvo as well. It's fairly similar, to be honest. And in each of the CV90 vehicles, there are 2 to 3 Clavister products, physical products running the Clavister software, doing active cybersecurity and active monitoring in each vehicle. BAE has not only seen this as something necessary evil, they even managed to position this as a differentiator towards the other infantry fighting vehicle manufacturers like Rheinmetall, General Dynamics, and others. So they made a story about the vehicle becoming cyber defendant as well. As a final case study, an example of what we're doing in the telecom field, we are highly active in supporting mobile operators with security for 5G. Similar type of challenge, obviously, if you are able to attack a 5G network, you can literally black out the entire network and no one can call, obviously critical. So in UK, we have Hutchinson-owned 3. They are currently Clavister's largest mobile operator customer. They have several hundreds of our products being deployed in the UK. And when they are now building their new 5G standalone network, one of the largest in Europe, they've chosen Clavister for the full rollout for security. Protecting not only the network from hackers, but also the network from other mobile operators. There are 800, 900 mobile operators in the world, and you can't trust everyone. So you need security in very many aspects of a modern telecom network. How do we scale the business? This example here is on defense, but we have a similar go-to-market strategy for all our businesses. So it starts with the partner. We need to get scale from our partner network. In this case, BAE Systems is our partner, where we won a frame contract for integration into the CV90, also into the bandwagons, the BVS10. Those are less digitalized yet, but that's to come. So far, we've been included in the 4 most recent nations who are deploying the CV90. So that goes from the Norwegian Army to the Dutch Royal Army, and the most 2 recent wins for BAE Systems, Slovakia and Czech Republic. In the pipeline, it's quite a massive pipeline, to be honest. And you've seen probably the news just the other day, where Sweden is acquiring more CV90s. Denmark is acquiring and upgrading CV90s. Ukraine has a strong demand, obviously, and they're talking about up to 1,000 CV90s for Ukraine alone. The scalability in this model comes not only in that dimension, it comes from us working with more partners, obviously. We have a design win with General Dynamics in Spain. Through them, a number of other prospect projects running, and similar type of setup with Saab MBDA, which is a joint venture between Airbus and BAE Systems, missile system producer, and a couple of others who we can't disclose, at least not currently. So it's a really, really interesting scalability in the model. How have we then, as final 2 slides, been performing so far? We've been on a growth trajectory for the last few years. The company is still quite old, but for the last few years, it's been a growth journey. Our order intake, quarter to quarter, last quarter up 10%, with last 12 months over 300 million of orders. As we speak, roughly 250 million of order backlog. This has translated to quite a nice and steady net sales growth over the last years. So 21% growth last quarter, year over year. More importantly, potentially from an investor point of view and a valuation point of view, a big part of our revenues are software recurring revenues. And this was a change we made a couple of years back, where we shifted a lot of our sales into recurring revenues. So our recurring revenues growing healthy, steadily, so roughly 125 million as of last quarter. This turns into, first of all, a very healthy gross profit. So as a target, we've stipulated 80% plus as our gross margin target. We've been on or above that level more or less constantly over the last years. And even in times of good growth and a lot of hardware shipments, we are able to maintain 80+% gross margin. In parallel to that, we've been through a cost journey as well. So as you can see, we've been quite aggressively reducing our operating expenses from fairly high levels, cut off around 20-25% of our OPEX, which combined has led to a very nice EBITDA development on the last line. We're for this year looking at meeting a positive EBIT, and in the Clavister case, EBIT and operational cash flow is more or less the same. So that's your translation to cash flow. As a summary, why invest in Clavister? Well, the market is quite obvious. It's a fast-growing market. It's already super big, but still growing heavily. Our software is proprietary, meaning that we own the vast majority of our IPR. We have more or less 95% of the products we sell is developed by Clavister, owned by Clavister. Even though I spoke about quite some large companies, large customers here, the fact is that our portfolio of customers is spread over 20,000 recurring contracts. So the base business is, quite low risk. It's stable, it's growing, and there is no single customer today with over 10% of our revenues. And hopefully, as you saw, the business model is really scalable. I made a comment the other week that even with this OpEx base we have now, we don't see any reason to scale our OpEx upwards to continue to drive growth as we've seen in the past years here. At some point in time, of course, OpEx needs to grow again, but not in the next near future. And finally, the team with 120 people, low turnover of staff in Clavister, which means that the average skill set, the average experience is many years. And that includes the board of directors as well. I think I'll stop there and leave back to you, Simon, for questions.
Thank you, John. And I want to start with the core business, because the ARR and the software business is still your bread and butter. It's not the large defense order that you have secured. So maybe you can just start with elaborating a bit what you think will drive that growth coming years, and how much can it grow?
Absolutely. So just as a background, in what we refer to as our base business, we have essentially two areas of solutions. We have our firewall solutions and we have our identity solutions. The identity solutions comes from a company we acquired some years back. And as you mentioned, Simon, these two businesses, they provide the vast majority of our recurring revenues today, and they are distributed over some 20,000 contracts. We've been focusing in the past years, we've been focusing that business on public sector, on energy companies, again, companies or customers that have a strong need of cybersecurity. So the growth potential we see there comes essentially from, I would say, two vectors. One being the underlying market growth, the demand in those areas. And the second comes from our geographical distribution, if you like. So, for instance, our IAM, our identity solution sales, has up until this point been mostly focused in Sweden and is still generating some 50-60 million of revenue, majority being recurring. As you saw on the map, we have a partner network across Europe where most of, if not all of those partners outside of Sweden, they have not yet picked up our identity solutions and started selling them in the respective countries. So that's another growth potential to scale geographically as well. Again, with the partner network, so without the need for us to invest in sales headcount. The partners are already in place.
And I think that base business was growing some 13% last quarter.
We're not exposing the individual segments, but all of them are growing and growing healthy.
Yeah, but do you think that that kind of growth can be sustained for that business?
Absolutely, absolutely.
Yeah.
That's where we have the majority of our customers, numbers-wise, and I mean, the underlying growth, the underlying demand is just increasing. And we see more and more proof points that with the focus journey we've been through the past few years, we see the effects coming now in the growth.
Do you think we can go back to the CV90 orders that you showed? Because I have a follow-up on that. You have secured a few large orders now. Yeah, exactly, as you can see here on the right. How should we think about the potential of the orders that you highlight here? It could be potential orders, but also broader. How can we put the orders you have secured into perspective of the total potential pie of orders?
Absolutely. So, I mean, to start with, one important aspect to bear in mind here is that there is a saying in the defense industry currently that before Russia invaded Ukraine, there was a lot of time, but no money. Now there is a lot of money, but no time. Why is that important for us and for the defense industry? Well, that literally means that previously, customers, nations, individual Ministry of Defenses they had the luxury of custom design any weapon system that they desired. And the CV90 was no exception. Each and every country had their unique specifications. That time is over. There is literally no time to do changes like that. They need to buy things that are existing from the shelf, which means what has been configured and designed for Holland, for instance, for the Netherlands, that is what is available. That is what Sweden has to buy. That is what Norway has to buy, Denmark and Ukraine has to buy. And this was specifically confirmed. There was a press release yesterday from the Swedish Material Defense Administration where the General Jonas Lottne, who is the procurer of CV90s in Sweden, specifically said this, that there is no time to buy something else than what is produced. And again, this is important for Clavister because we're designed into those original designs, which means that it increases our chances to be part of any future contract as well.
And what do you think about Sweden, Denmark, Ukraine? Are those together potentially bigger orders in terms of vehicles?
Yeah, if we look at, for instance, Ukraine, that might be the extreme case. They have, when Zelensky was meeting with the Swedish Prime Minister, he announced a desired number of 1,000 CV90s. And that should be placed in perspective to, for instance, well, the Dutch CV90 fleet, which is 120. So almost 10 times larger. If we look at, of course, Denmark being a much smaller country, but they still operate around 50, and they have announced externally needs for another 100 vehicles. Sweden is replacing 50 vehicles at least, and they are shipping more to Ukraine. So accumulated, we're looking at quite significant numbers here.
All right. And lastly, you talked about long lead times, but what can you say in terms of time frame of the potential new platforms here on the defense side? How is it progressing? And
you mean outside the
exactly
BA systems?
Outside of the CV90, for example.
Yeah. I mean, I can first of all give a sort of general comment on the timeline from the first interaction with a customer until proof of concept, until being selected as a vendor. We typically look at 2 to 3 years of time, so that's significant. The good news, we didn't start yesterday. We started some years ago with the other logos here as well. From being selected as a vendor until there is a program from a Ministry of Defense and there is an active rollout, that's another couple of years. So the key here for us is to have a smorgasbord of multiple opportunities running in parallel because of the lead times. Out of these logos, they are not placed there as examples. They are concrete partners to Clavister today. We've come different far on this journey I talked about with different of them. We have some where we have commercial deployments, some who are about to go commercial, and some where we're really early. So, I mean, in essence, of course, I'm not able to talk about an individual case, but we've built a pipeline where there should hopefully be natural fallouts, positive fallouts in terms of orders coming along the way here.
All right. Thank you, John. That's all we had time for, and thank you, the audience, as well, for tuning in.
Thank you.
Yes, hi and welcome everyone for the next presentation of this day. With us now we have BTS, a global management consulting firm. My name is Daniel Torsson, analyst at ABG. I've been covering the company for the last couple of years. And with us today on Teams from the West Coast in the US, we have CEO Jessica Skoon. So I hand over the word to you, Jessica. Please introduce and describe the BTS story, and I will follow up with a couple of questions in the end.
Thank you, Daniel. It's my pleasure, and lovely to be with all of you. Go ahead and move forward, Daniel. I'm proud to present to you BTS. It's a company I've been with for 25 years this year, a company I know well and love, and we're very proud of the fact that we're a story of long-term profitable growth year over year. If you look at the next slide, you'll see kind of our performance since we went public back in 2001. On average, we have 12% revenue CAGR and 15% EBITDA growth CAGR per year. And if you kind of start, I'll double click into why, like what's behind that overall long-term kind of superior returns. And there's basically 5 big reasons. And I'll double click into each one, right? So one is, we have the pleasure of operating in a very global, growing and a fragmented market. Number 2, I'll explain a bit about our strong competitive position in that space. Number 3, I think you'll find that we are inside a very entrepreneurial, innovative company, and we're also at a point in our story where we can start to really take advantage of our scale. Number 4, we have had a really great success record of investing in acquisitions for geographical and capability expansion, and I think what's really important there is that those have yielded long-term growth and performance, not short-term hits. And then our overall talent and culture that our founder established, and I have the pleasure of strengthening and holding, is obviously at the bedrock of our performance. So let's just walk through each one. BTS, growing and fragmented market. So we have the pleasure of taking market share, both from the traditional HR consulting firms and also from the traditional consulting firms. We've kind of always been our own type of company with our own set of services, and our buyers in both categories comment on how different we are. Basically, our estimates is that if you look at both of these combined, it's a $30 billion market on average. I mean, last year we know was a tough year in general for the consulting industry, but historical averages are 4 to 5% growth per year. It's highly fragmented. We operate in 24 countries, 33 offices, and we estimate our market share is around 1%. So there's a lot of room for growth. Keep going, please. Just like you would think about, when do companies and CEOs invest in consulting and HR support? It's when they're dealing with any sort of big change, or they feel the need to shift or strengthen the caliber of their people or the caliber of their culture, right? So BTS gets called in to do work when the company needs to shift their values or reset leadership expectations, when they need to establish new processes or new ways of working. I will tell you, over and over and over again, companies are too optimistic about what it takes to get, hundreds of teams to change the way they work, and that's BTS's expertise. We help a lot of work on kind of bottom line profit improvement in terms of, right now in a higher interest rate environment, higher cost of capital, or when our clients are facing pricing pressure, we can help map out and plan for certain regulations and any sort of disruption. So change is a really good driver of demand for BTS services. The following slide, you'll see just kind of a general sentiment that it's maybe overly simplistic, but it's one that we are experiencing quite a lot today. If you do 2 clicks, please, Daniel. On the HR consulting side, we hear a lot of we need to redesign our approach, right? Either the way we're hiring people or putting people into the right positions, and or rethink how we develop our talent across the company, moving from more of a traditional way of training and talent development to more in the flow of work, developing or designing training for massive change at scale. And then on the traditional consulting side, we're hearing from quite a number of CEOs more of a sentiment of we want to move a bit more of the work in-house. We want to empower our leaders. We have great people here. They can lead and drive more of the implementation and the change. On the following slide, in terms of our competitive positioning, basically our focus has been to make strategy personal. That's what we do. We are on the people side of change. And one of the most differentiating parts of our offering is our ability to build models and simulations They are some of the most effective, powerful tools to do everything from allowing somebody to test drive the job, and the company can get a read on their readiness for the role, all the way to prepare teams to work differently, to help leaders get ready for their first time being a leader, to help the CEO pick the next members of their executive team, to help people who are in overly siloed jobs see the company as a whole and practice driving the strategy forward into the future, and on and on and on. So this particular capability, one, makes us quite unique because we engage the clients in the work. They're proud of it. They design it. They co-create it with us. They use it as a massive tool for communication, alignment, practice, preparation. But it also gives us a business model that's unique. It's one where we, since our beginning, have a license stream associated with our work. And that license stream is in one pure license, and it's also evolving into a subscription license stream. But most importantly, you get breakthrough thinking and breakthrough working when people get to practice and prepare in a simulation, just like athletes practice and prepare and run plays. Over time, on the next slide, you'll see how we've expanded our practice areas, which gives us basically two benefits. Number one, more problems that we can help our clients solve. Number two, average revenue spend per client. So this is the list of our practice areas in terms of helping clients drive strategy and strategy implementation and strategy alignment, making sure everybody in the company understands their business model and has the acumen to make the right decisions. Leadership development. We've been redesigning clients' executive to frontline leadership development for decades now. We have an assessment offering. We can go deep in change and transformation. We have an offering around executive presence and teams performance and communications. We provide coaching from CEO and board members all the way down to the front line. We have a practice on innovation and digital transformation, which you can imagine now is in high demand, sales and marketing, and then DEI. And on the next slide, you'll just see our average customer lifespan is approximately 7 years. We have about 50 of the global Fortune 100 as our clients. Since our inception, we've gone after the bigger companies because they have a lot of people who are often misaligned or uninspired or need help getting to the next level of performance. And you can see some just sample clients on this slide. In terms of overall strong competitive position, you can see our revenue size. We've been around for 38 years. We have approximately 1,100 full-time people spread out across 38 offices in 24 countries. One of the other beneficial things we have in our operating model is we have about 600 kind of contractor freelance employees as well. And some of these people do very unique things like coaching, for example, but others have a similar skill set to our full-time employees. So if the demand picks up really quickly, we can tap into that network. If we need to slow down how much capacity we have, we can do it there first as well, which helps to drive kind of profitable growth every year for the company. Yeah, so that's the strong competitive position. If we move to the third topic, you'll see that we've over time continuously invested in what it takes to drive organic growth, and now also thinking about how to best leverage our scale. I will say on the organic growth, and I've mentioned this already, but we have a highly entrepreneurial culture. It's a culture where the teams who are serving clients have a lot of freedom. They feel trusted to bring their creativity, to try new things with clients. We have a compensation model that is higher on variable in general than it is in terms of the base. So total comp is super competitive, but it's higher variable, which helps to drive that entrepreneurial spirit. And that starts early in the consultants' careers, as opposed to a model where only the top of the company are the ones generating revenue. But so we continue to invest in best practice simulations or simulation platforms that not only allow us to do multi-day sims, but micro simulations at scale for hundreds of thousands of people on a regular basis. You know, I mentioned the 24 countries, and I would say there's been a lot of energy the last couple of years to keep that spirit, but start to drive more one company mindset across some of our functional and operating support teams. So help desk, for example, let's try to do it one way across the group. It makes the software behind it much simpler. It makes the cost structure much simpler. And we have probably 6 different functional examples like that where we've been working to shift to that way of working over the last 18 months. Yeah, exactly. One way to do translations, our tech platforms, all of that. And then on the fourth side, we've made a lot of progress in the last year leveraging large language models and ChatGPT and generative AI, both in terms of the competitiveness of our services. And right now, primarily, it's been the quick release of practice spots, which would make sense given what our simulations are intending to do. We're also really interested in being able to give people real-time feedback in real meetings. So meetings with customers, meetings with their teams. So you're not taking people out to practice and prepare anymore. You're just giving them feedback, and that's possible now with AI. We are using a lot of experimentation around the company. We took a pretty grassroots approach to giving access to the teams around the group, and we're kind of monitoring them and keeping track of where we're starting to see that the real productivity gains versus where there's the hype. And for us so far, that's coming in spades in terms of our translation process, content creation, the assessment report generation, how we're able to set up benchmarking and research and do that much more efficiently. Those are the main areas so far. And I already mentioned the benefit of the freelance partners. So that's kind of on the organic side. Now, I mentioned we also historically make 1 to 2 acquisitions a year. We don't push it. It's a lot of what's available in the market combined with our capability gaps and our geographical gaps. But Philios and I, my colleagues, spend a lot of time meeting with potential partners and companies to buy. You can see the overall strategy is to increase the portfolio, make us stronger in geographical needs. Given the nature of the market, and in the past, we have focused on more small to medium-sized businesses. They're typically, great entrepreneurs who invented something wonderful. They've built up a team, but they're at a point where in order to grow further, they might have to take it global. So finding a firm like BTS, given our culture and our global reach, is a real win for them. And I will say that I'm proud of this, that once companies meet with us, we tend to pretty quickly become their first choice, which also gives us an advantageous position in terms of negotiating and getting the best ones. You can see the list of who we've acquired since 2014 on the right-hand side. And you'll see there, 3 of them were for geographical expansion, and all the rest for increasing our capabilities and the services we could bring to our clients. And finally, kind of the 6th point around why have we had revenue growth and EBITDA growth, double-digit growth since our inception of going public in 2001. It's this, right? It's we refer to our culture as one that's both high-performing. So there's a lot of autonomy, a lot of clarity of accountability. We kind of make it as entrepreneurial with P&L responsibility as many places as we can. But we're also fun-loving and we're big-hearted. And I think that the combination of those 3 things where, we try not to be corporate, we try to be down to earth, we have fun with each other, it's warm, all those things show up to our clients, and especially for some of the bigger companies, maybe not as much so in Scandinavia, but certainly in the US and some of the other countries, that is a breath of fresh air. So I get a lot of feedback from our client CEOs and CHROs that the culture is really wonderful for their teams to work with. And lastly, if we just kind of look at current financials, we've just released our Q1 report. Globally, we're growing 7%. Our biggest market is North America, which grew 10% in the first quarter. BTS other markets is growing 8% in the first quarter, and then we're still struggling in BTS Europe with -4%. And if we also have a stable and growing dividend. We've been doing that since our IPO. So our goal on the dividend is to distribute 40 to 65% of the profit after tax. For 2023, we approved the 5.7 Swedish kronor, and that will be divided into 2 installments. And as I've said, our outlook for 2024 is that the EBITDA is expected to be better than 2023. So Daniel, I hope that's okay, and I will open it up for questions.
Yeah, that's very good. Excellent. Thank you very much, Jessica. I start off with a question on the 2024 outlook. We looked at the geographical development in the last quarter here in Q1. What is really behind the outlook? What needs to improve or continue to be better here? Is it North America, the markets driving growth, or do you foresee any improvements in Europe throughout the year driving the earnings outlook?
Yeah, well, I'd say first, the productivity and efficiency initiatives we did last year are still continuing to work their way through the system, right? So I think that we are running a more efficient company as well, which is helpful. And then to your point in terms of top line growth, yeah, the biggest market growing double digits is a big one, obviously. We expect BTS, other markets, you know, they grew 8%, but they typically start off a little slower every year, and then the demand typically tends to grow. So right now it's feeling that that's possible. And then, you know, both of those markets growing at a certain clip can make up for the overall conservative market that we're experiencing in Europe. I mean, the team is doing a lot in terms of, you know, spending all of their time with customers and finding new opportunities, but they're still experiencing delays and cancellations similar to what we saw in North America at the middle of last year.
Yeah, I see. Can you share some sector insights that you get? Are there any sectors that are driving a stronger demand for strategy implementation right now, and which are the end sectors that are cutting off the projects you mentioned?
Yeah, you know, it's a little bit different across all the geographies. However, a strong sector for us, and it has been now for 6 to 8 quarters, is pharma bio, is growing very strongly. Tech, which is about 20% of our business, is also coming back and rebounding and much stronger than it was last year. So that's wonderful to see. I mean, they did a lot of cost cutting, and so now it's kind of investments to drive growth and to kind of reposition themselves around their updated AI offering and all of that. Financial services is a little trickier right now, obviously given the interest rates.
I see.
I would say just one other thing would be like health, or food, manufacturing and food had a really strong run, and now it's getting more difficult for them.
Okay. Interesting. And then another operational question. I mean, you had some headwinds in the North American market 1.5, 2 years ago with the tech sector, but you were able to relocate resources from the west coast of the US to other regions with stronger demand. If we see that in Europe, or we already see the weaker demand right now, are you able to relocate people and resources to the same extent in Europe, given different language hurdles, countries, etc., compared to the US? Should we expect you to be as efficient as you were in North America?
Yes, the answer is yes, right? I mean, English is the company language, and even within Europe, they support each other on a regular basis cross-country in terms of both travel and virtual work. And the Europe market for us actually does not include Spain and Italy. So there's also a lot of overlap or the ability to share teams between kind of continental Europe without Spain and Italy, and then that market as well. So the answer is yes. We have done a much better job the last 2 years of moving teams around the world virtually or even for stints at a time to help with strong demand and slower demand. We'll continue to do that.
I see. Okay, that sounds promising. On the net recruitment side, number of employees have been down slightly in the last couple of quarters. You mentioned the efficiency work you've done. When do you think, in timing-wise, we should expect net recruitment to be positive again? What would you like to see happen in the market for you to start net recruit consultants again?
Yeah. Well, first of all, I really like the question, because we do know that we have to add new, fresh consultants and number of new sellers to continue to grow the company right out into the future. At the same time, there's 2 pockets of employee groups that we have to monitor pretty closely before we do the full-time net hiring balance. And one of those is the growth in our coaching services, because that work is done by the freelance employee group. So if that's growing like super quickly, for example, we would go to that group as opposed to hiring a whole bunch of full-time people, right? And the other one is the non-coaching freelance people we can also tap into. However, North America and most of the world, right, have hiring plans. They have net add hiring plans. We have been hiring some amazing talent, especially some senior talent from competitors who are absolutely fantastic. We had a BTS partner who was a top revenue generator 4 years ago and ran one of our offices, come back just 2 weeks ago. So I would say at the moment, our hiring has been quite strategic, kind of taking advantage of the market with more expensive but senior talent. And the recruiting plans kind of go back to normal, where it's the classic apprentice model. I'd say we start to see net adds by Q4.
I see. Okay, that's good. That's helpful. And then on the margin target, the margin development, I mean, you were at 15% EBITDA margin 2 years back. You raised your target to 17. Now we are trending at around 13, so it has come down 2 percentage points. What is needed to happen in your business, in your market, to go from the 13% level now up to the 17%? What needs to change here?
Yeah, I think it's a combination of things. I mean, first of all, Europe needs to get back to growth.
Yeah.
Right. That's clear and important. But then once you kind of go out of that problem, I still think, given that we take share from traditional consulting firms and HR, we are perceived as, I would say, quite a deal or inexpensive compared to the traditional consulting firms. So we need to continue to push up our pricing on the work that we're competing against the big consulting firms on. That might be the easiest lever. The second one is increasing the part of our business that supports more real-time on-demand and at scale, because that is our subscription and license offering. And when used there, I mean, yes, we have to do more kind of customer success like support to drive the usage and the adoption, but the margins are typically in those accounts much bigger. And then the third thing is to continue to look at our operations and our spend on like the operation teams globally and continue to fine tune, make more one team, a more simple process that yields savings in software spend and shifting to some resources to less expensive markets and so forth. So those are the big four, actually.
Yeah, exactly. I see. And then a follow-up on growth journey here. You showed the M&A list historically since 2014. What type of targets are there out there right now? Are you looking at a couple of targets? How active are you? Would be interesting to hear.
Yeah. We have 3 right now that we're very involved in. We probably have about 5 others who are just early stage, which most likely they won't move forward, right? It's just early getting to know them. And the ones that we're spending more time on right now vary from 2 geographical and 1 tech kind of need. So on the geographical ones, they have strong entrepreneurs with a portfolio that's not as big as BTS, but not just one thing either. And it would strengthen in our markets outside of North America and Europe.
Okay, I see. Interesting. We talked about exactly. We talked about the margin target here, but if you were to kind of explain where we are in the utilization phase of the consultants right now, are we kind of below average, or we are certainly not above average, but you have also reduced number of employees? Where are we on the trend? Are we kind of at the bottom, or?
Yeah, we started the year with about 5% capacity across the system, right? 5% more than what we were able to deliver last year. And with our full-time employee base, I would say our first quarter then, we're getting close to capacity, right? In terms of the workload. Now you have to remember we have the part-time group as well to tap into. I think, the second quarter is a lot bigger than our first quarter, always, typically, right, in terms of size. So while we grew 7% in the first quarter, it's a smaller total revenue. So the team is feeling a lot more busy right now in the second quarter than they did in the first.
Yeah, I see. And then, I mean, you mentioned the price increases here. You have mentioned that for a couple of years, I think, when we have discussed it. What can you do to raise your prices? Is it difficulties on the customer side that they think they are too high? Or is it that you start off too low and lower that you could actually start off in the hindsight? Or how should we think about the price increases ahead?
Yeah. The way that we increase prices, we have it in a CPQ system in Salesforce. So it is kind of a company more process thing that we can update it when we want, and it cuts across all the deals, which is really wonderful. That said, the variety of services, I mean, I would say that when we do kind of frontline individual contributor work, that we are probably very appropriately priced. We do not lose there because we're too expensive. We kind of understand the market really well. When we are competing against BCG or McKinsey for big change initiatives, there we have a lot of room, right, to increase our pricing on. So I would say, that, and when we're doing our executive and C-suite work, we can also increase our pricing there. So that, I think it's more on us It's more on us to scope and have kind of the paradigm shift to drive the pricing up in those services. I think the easiest thing for us to do is continue to increase the price on the new deals that we're winning, right? Because our average contracts are probably 6 months long, in terms of the projects. For the long-term projects, though, we typically do the annual price increases as well.
Excellent. That was actually my final question, Jessica. And I think we're 25 minutes into the presentation here and should round off. So I say thank you very much for presenting BTS and replying to my questions as well. And see you next time.
Sounds great. Thank you, Daniel.
Thank you.
Good day.
Bye.
Bye.